Twitter. The CEO, Jack Dorsey, is encouraging all 5,000 employees to work from home while making it mandatory for those in South Korea, Hong Kong and Japan. This is the latest in a series of measures taken by large companies to prevent the spread of the virus among its employees. Google ordered the 8,000 employees working from its European headquarters in Dublin to work from home today after an employee reported flu-like symptoms. Others, including Facebook, have cancelled or postponed participation in conferences. So a quick look at the chip makers, and clearly that story tells you one about consumer behaviour, what you may see in terms of transportation, spending at restaurant and cafes if some of these employees are staying at home. So perhaps it's a consumption basket to look at, but these are the chip makers. Clearly there are concerns around the supply chain for a lot of the big technology companies. Analysts, meantime, at HSBC have cut the target price on a number of European airlines as we take another look at the sector today. IAG, Air France, KLM, Ryanair and Norwegian Air among those whose target price have been slashed. The sector has come under pressure due to concerns over depleted demand amid the coronavirus outbreak. And if you look at these levels today, it has been rough going for this sector. But movement today, and I want to go to the big ones in particular, IAG, the owner of British Airways, 4.2% bounce. Lufthansa, which has been hard hit in recent days, it is rallying close to 5%. I want to take it to SAS now. Also in the sector, Scandinavian Airlines has slashed capacity and dropped its guidance for the year due to coronavirus. The carrier said it was too early to estimate what the impact would be on its operations, but SAS says it is considering a hiring freeze and temporary layoffs as part of a plan to mitigate the impact, which is fascinating because we just spoke to this company recently. Well, it was last week, in fact. The CEO, Rikard Gustafsson, said that bar China and Hong Kong booking numbers for the summer were not being hit. Take a listen to that soundbite back at the time.
This thing is actually moving very rapidly and things change all the time. And I wish I had a crystal ball so I can look into the future. I don't. So I have to, rely on the intelligence that we have and the booking patterns that we see. And so far, if I exclude China and also include Hong Kong in that, where we still operate, but of course the demand for Hong Kong has dropped rather radically in the last few weeks, we still see a normal incoming booking pattern for the summer season.
President Trump has praised the Reserve Bank of Australia while using it as another opportunity to criticize the Federal Reserve. The US leader tweeted it was, quote, sad the Fed could not follow the RBA's lead and that Chairman Powell had, quote, called it wrong from day one. The European Central Bank has vowed to take, quote, appropriate and targeted measures to stem the economic fallout from coronavirus and stop the Eurozone from falling into recession. The statement by ECB President Christine Lagarde follows a series of similar announcements by the leading central banks. And we've got a slew of banks up on our wall, as you can see here, and we've had a reasonable rebound across the sector. The stock 600 banks, as you can see, up 1.5% at this point. Aneta has more on both the direction of travel for the European Central Bank, I guess, and for the way that some of the banks have responded to that. Aneta, good morning.
Good morning, Jeff. Yes, indeed. It was a bit of a surprise when that statement came out yesterday, very late. Yesterday evening by Christine Lagarde. Well, they are saying they stand ready to take appropriate and targeted measures. That's no less than, I think they're hinting at some coordinated actions between the central banks worldwide that we have last seen, I guess, during the financial and debt crisis, which then rocked the markets worldwide. So that gives you a sense of what they think about the magnitude that shock from the coronavirus might have on the economy. Just last week, they still were downplaying the likelihood of any imminent monetary policy response, but that has changed by now. I guess they have all woken up that the supply chain might have been damaged quite tremendously. But at the same time, I guess we are already hearing some disagreement inside the governing council. Just last week on Friday, I spoke to the Bundesbank president, Jens Weidmann, and he was making pretty clear that, what can a central bank do against the virus? That's the big question. So if that is a supply side shock, the central bank can do a lot. that is different from a demand side shock. So the question is what these central banks want to do. The majority view is that most likely we won't get any rate cuts from the ECB because there's not a lot of room for rate cuts in Europe. That is different from the United States, where we really have some room for rate cuts. What could happen here in Europe is that they're going to increase the cheap loans provided to banks in return for them meeting certain lending targets under the TLTRO program. But that's about it, I guess, for the moment. The market is currently pricing in a 10 basis points rate cut, but only for April. Remind you, next week we have a monetary policy meeting at the ECB, just a normal scheduled one, and also a press conference. So I guess all eyes will be then on the ECB, how they see the economy evolving forward, because that shock now hit the Eurozone at a time when the economy already slowed tremendously to rates last seen also during the debt crisis or after the debt crisis. So it is in a very big spot anyway. So it remains to be seen, but I guess we're going to see some action. I'm also hearing that call is taking place at 1 o'clock CET among those central bankers worldwide. Back to you, Jeff.
Annetta, thank you very much for that. Ed Park is with us, Deputy Chief Investment Officer at Brooks Macdonald. Interestingly, Ed, one of your conviction underweights is European equity markets. Are you concerned at all that there is a chance that we might get a strong rebound in European stocks because the ECB is making these pronouncements? Will this be another 2012 Draghi moment? We'll do whatever it takes, and that pushes up the asset class that you're underweight in?
I think it's a real challenge to see what the ECB can do in terms of monetary policy. We're talking about one, maybe two rate cuts of 10 basis points. I mean, that's completely different to what we're seeing in terms of expectations from, for example, the Federal Reserve. Granted, rates a lot higher, but that means they can do a lot more. So you're looking there, markets expecting 4 rate cuts of 25 bips. So I think maybe the ECB can do something, but it probably can't do as much as the rest of the world. And I also think, in terms of fiscal stimulus, actually getting the overall EU bloc on board with some sort of fiscal stimulus is going to be a lot tougher than elsewhere in the rest of the world.
What it can do is it can prevent companies from throwing workers out of jobs because they have come to a point where their financial reserves no longer protect them from the impact of slower factory operations or slowing orders or whatever the economic consequences of coronavirus are. So it can allow companies that are troubled with liquidity issues to stay alive for longer. Is that not one way that we could see the ECB change the market's anticipated impact of coronavirus on economic activity?
Again, I think it's part of it is about whether it's about retaining what's happening in terms of the marketplace at the moment or stimulating. And I would also bring it back to Eurozone equity valuations, which are actually more expensive than both Asia ex Japan and the UK. So I do think if we see a general fiscal and monetary response to coronavirus, actually Eurozone won't necessarily be one of the big winners. The UK and Asia might be greater beneficiaries.
It has to be fiscal. If you look at the various parts of the jigsaw in Europe, and again, let's just talk about Europe for the moment here. The corporates have, and I keep making this point, and I'll give some documentary evidence as well for this. Corporates who are worth lending to have as much money as they could possibly want at the cheapest levels in history. Back in October last year, Nestlé became the first of corporates to have a negative yielding 10-year piece of paper. On the 2nd of November 2029 is the maturity on this. It was a 1.25% coupon piece of paper from 2017 that went negative in yield. Now, these are amazing companies, and I take your point, Jeff, about keeping people within their jobs as well. But big corporates, you have to take them because they've already got as much money as they can possibly need at the cheapest levels possible. And what are they doing? Well, we heard from Mark Dixon there. They're buying back some shares because they really don't know what else to do with the corporates. The money as well. Elsewhere, I don't understand where the demand is going to come from good quality borrowers as well. So then, and if the ECB can't do anything, then it has to be fiscal, doesn't it?
I think it has to be.
Which means it has to be German, and what they call this other lot, the frugal four.
Exactly, and that's been the real challenge. We've been talking about this for 18 months, of the idea of when would it be that Germany would come to the party in terms of fiscal spending. They narrowly avoided a recession, and they keep on narrowly avoiding a recession. It might now be almost impossible in Q1 and Q2 of 2020, but actually almost what seems to be needed is a recession to actually kickstart a bit of that fiscal spending. But I don't think of all of the governments we should be looking for, we should be holding our breath over that. And we mentioned the Italian fiscal spending that has come through. It's relatively modest, and you compare it against something like what's come from Hong Kong, which has been helicopter money, quite a dramatic show of economic force there. It's really not. I think getting coordinated response in the Eurozone might be quite optimistic.
Excellent. Ed, you're staying with us, so we'll come back to you after a very short break. Safe to say, coming up on the show, the BMW boss is Oliver Zipser, and he talks to CNBC about the car maker's electrification plans. It's the first of a series of auto interviews today. Later on, we'll be speaking to the CEOs of McLaren Automotive and Porsche.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss.
Giannis for his second three. A, B, C. 1, 2, 3 for the MVP.
Giannis and the Bucks take on LeBron and the Lakers in a potential NBA Finals showdown.
LeBron dribbling, spins out of there, reverse layup, good.
This Friday, the Bucks are at the Los Angeles Lakers. Tip-off is at 10:30 p.m. Eastern. Search NBA to follow your favorite team today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Your cost.
Even a brand new laptop and tablet to use in school. Call IU, then tell them your dream.
1-800-967-0542. 1-800-967-0542.
The American spirit, inherently competitive, always driven with a hunger, ambition, and an appetite to succeed. The pursuit of prosperity can be unpredictable and thrilling. From breakthroughs to breakdowns, the launches and the crashes. Perseverance is paramount. Knowledge essential.
Good morning, everybody. Welcome to Squawk Box here on CNBC.
That's what drives us. It's in our DNA to provide the information you need wherever you are to propel your dreams forward.
We have a reading on the retail sector over the last 12 weeks, and Cantor just posting some numbers today. Effectively, we've seen the fastest rate of growth in sales since November, 0.7% number in total sales for the UK grocery sector. So that's fairly significant, 12 weeks to February 23. But of course, just before the coronavirus fears have really started to stretch in the last week across the UK. When it comes to inflation, that is 0.9%. The beneficiary Sainsbury's did quite well, sales up 0.3%. But then if you start to drill down to market share, everybody reporting fall in market share except the usual suspects, so Ocado, Aldi, Lidl, the real beneficiaries again. The other line around coronavirus, hand sanitizer sales up a fairly mighty 255% in February due to coronavirus, and that probably rings true if we think about our purchases lately. Have you picked up some hand sanitizer?
Not yet. I should do, clearly.
Have you seen?
I've got an industrial store already.
The prices on some well-known platforms are ridiculous.
Yes.
That people are speculating in hand sanitizers and in face masks. And it's just unbelievable, the degree to which it's happening at the moment.
I must say my consumption of hand sanitizer has gone up remarkably. It wasn't really used.
You go into any meeting anywhere now and they will be offering that proactively before you sit down.
Right.
And a good thing too.
Indeed.
We should add. Important that people do take precautions. Let's move on. BMW CEO Oliver Zipse backed the car maker's strength despite concerns over flagging growth in the German auto market. Speaking to CNBC, he also discussed its plans to focus on the sale of electric vehicles.
We are underpriced. That's my comment to that.
Are you expecting the pricing or the share prices of German car makers to kind of recover from what has been sort of a more or less depressed time for the last 2 years?
I think, capital market evaluation is a very peculiar thing. I think BMW, and I can only speak for BMW, has some very unique industrial strength. It has 3 very strong brands, BMW, Mini and Rolls-Royce, and I think the market evaluation is far below what our company is actually worth, and we are working on it to convince the capital markets that BMW Group is a good investment.
What do you tell those who say that the German car makers just woke up far too late to the new trends?
I don't think that we woke up too late. We already sold last year more than 140,000 electrified vehicles. We continue on that path. We will grow by a high 2-digit number this year. I would not confirm that we woke up too late.
Zipse also played down the impact of coronavirus, saying the spread of the infection has yet to hit its operations.
The foremost and most important thing is the health and safety of our employees, and we will do everything to keep any harm from them. On the supply chain side, we don't see any larger interruptions yet, but we are monitoring the situation very closely, and we will see what is happening, but currently all our plans are working as planned.
Would you say the situation is warranting extraordinary measures from the governments and also the central banks worldwide?
I think we will have to see how it develops. Every day something new is coming up. We should be cautious, yes, specifically about the health of citizens and specifically our employees. But I would also not over-exaggerate the situation. So every day we will watch the situation as it evolves.
Let's talk about the regional developments, though. The Chinese market seems to be quite down given the virus, given economic activity due to the virus. So what's your expectations for this year for China?
I think China was a very peculiar situation because we had an extended New Year celebration. So a lot of citizens, also our employees stayed away after the festive season. But now dealers are reopening again. Our plants are working normally. So we had some impact in February. We will see some impact in March, and then we will see. And I wouldn't be too pessimistic for the whole year yet.
Let's get back to Ed Park then, Deputy Chief Investment Officer of Brooks Macdonald. So let's get to your advice then. Our audience looking in this morning, wondering what they should be doing with their portfolio, Ed. Obviously, some of them have got long-term plans, but quite a few of them are probably short to medium term in terms of how they think about their investments. What would you suggest?
I think the day-to-day trading at the moment and this week is extremely difficult to call. But I would point to a few things which I think have changed over the last couple of weeks. We've got the announcement of fiscal spending. We spoke about that before. But also, if you go back to the real fundamentals of what we're looking at, when we're looking at the difference between earnings yield and we're looking at bond yields. Now we're coming back to a position where that is looking extremely attractive. So you're now looking on the S&P 500, one of the more expensive markets. You're looking at an earnings yield about 5.9% against a US Treasury of 1.1, 1.2 today. So actually that differential has blown out a huge amount over the last week. And actually, as a long-term buying opportunity, that probably isn't a bad time to be at least reconsidering your equity positioning.
The index levels, what do you make of them? I mean, we've come off so far from where we started out the year. The FTSE 7,600, some of the highs, 6,700 today, almost 6,100 on the French market, 540 odd roughly today. Do you think we are going to see just a wading back into investors purely because of those index levels, that if you're a long-term investor, you start to think about entry points over the next couple of weeks and months?
Absolutely. I mean, and part of that is that equity bond differential I mentioned, but other parts of it is the all-in price to earnings ratios. You know, looking at the UK again below 12 times, you're looking at the Asia ex Japan. Asia ex Japan, I think, because it was so cheap, has actually been one of the relative outperformers over the last month or so, even though it was kind of the epicenter of this. And that's 12.5 times earnings. Those aren't bad entry points for a long-term investor. So you've got the combination of the all-in index levels, you've got the fiscal support, but also valuation levels.
The people who have been doing the most trading, I guess, are those, A, the machines, and B, those who've had to. A lot of longer-term investors you're talking about, I think, have stepped away, not knowing what on earth to do, wanting to own the market at these cheaper levels, but not really feeling confident with doing so because the discounting mechanism of the market is failing at the moment because we don't know what the clarity is as well. So in terms of the short-term clients of your company, because it's not just about the medium to long-term, what are they doing? And are they doing okay in this, or are they doing badly?
I think most of the conversation we're having around people who have got cash on the sidelines looking to put that into the market at this moment in time, rather than actually necessarily withdrawing from the market. I think the consensus is that there was a view of panic at the tail end of last week. And as you say, we've got huge amounts of uncertainties on coronavirus, whether it's mortality rate, infection rate, or even how far it's spread.
You have to pay 300 points more from the FTSE low of this week. 6,500, it's now 6,800. Pay more to know more. Do we know enough to pay more yet, or do you have to stand aside?
I would probably counter that by saying last week the sell-off was on the back of knowing a similar amount, but the sell-off last week was probably too extreme. So I mean, you can weigh up those two there. I think a few of the numbers flying around, things like mortality rate in the press is going between 1 and 3%, but again, most experts pointing to 1% or south of 1%. And again, I think because of all of that confusion of those numbers out there, it's more difficult for a very short-term investor to call the market. I think that's probably why you need to look at this on a medium-term basis.
Ed Park, thank you very much indeed for joining us today. Very nice to see you, sir. Ed Park, Deputy Chief Investment Officer. Brooks McDonald coming up on the show. Prime Minister Netanyahu claims victory after exit polls show a narrow lead. However, without a firm majority, it could be a political deja vu for Israel. We'll discuss after the break.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Don't miss another NBA game because you forgot when it started. Set a reminder with TuneIn. Just make sure notifications are allowed on your phone and search for your team on the TuneIn app. Then, simply find the game you want to hear and tap on Notify Me. We'll let you know when tip-off is about to happen.
You struggling with addiction? Do you need to detox? Is addiction controlling your life, hurting your loved ones? Don't be ashamed. Addiction is a disease that requires medical treatment. At Freedom from Addiction, we help people nationwide get free from addiction to alcohol, opioids, prescription medicine, narcotics, and more. Addiction is a disease. Get the medical treatment you need. Make the call. Call 800-427-0505. Call now.
Had either of you ever invented anything before?
Nothing.
We went from 5 employees to 500. Strange Success with Jay Wells. Subscribe to the podcast now.
There are so many new sources of data available to investors. Satellite imagery might tell you about inventory management and how things are moving around the world. One area of real interest is the cloud, when you can use it for large-scale transaction processing. Machine intelligence can help us to identify market manipulation, insider trading, and other sources of fraud in the markets. You're going to see fintech creating more global markets, more global transactions, and less friction in the system. This is the future of business. I watch CNBC.
People would love to go to space is enormous.
Opportunity. There's always opportunity.
We have to innovate to win.
We think about the long term.
AI will change 100% of jobs.
With some people in negotiations, the best technique is to act half crazy.
The biggest names in business are on CNBC.
Back with a bit of a vengeance. European stock markets rebounding sharply after the Dow posts its largest point gain ever, with the miners and tech stocks leading the rally. European financials also firmly in the green after the world's top central banks say they are ready to counteract the impact of the outbreak. President Trump praises the RBA's rate cuts, taking another swipe at the Fed. Travel and leisure also recovers after a torrid week as Scandinavian Airlines, British Airways and Ryanair continue to slash capacity to affected countries. And auto stocks joining the gains, racing higher after BMW CEO Oliver Zipse tells CNBC his company is operating as normal despite the outbreak.
On the supply chain side, we don't see any larger interruptions yet, but we are monitoring the situation very closely, and we will see what is happening, but currently all our plans are working as planned.
And we'll also hear from the McLaren Automotive CEO Mike Flewitt later on in this show.
Markets here in Europe have been trading for half an hour so far. And what we've had has been a very strong rally right from the outset as European markets have tried to play catch up to that very strong rally on Wall Street, to the monster point gain that we saw on the Dow, the biggest in history, and right across those major indices. European markets were still cautious yesterday, so that mindset is shifting sharply now. And what investors are trying to watch out for has been that flood of stimulus where the gates start to open from central banks and from finance ministers. A G7 meeting conference call being coordinated later on today. And so far, we've already seen action from one central bank, the Reserve Bank of Australia, the first to move to slash rates. All eyes now on the Canadians this week, and later on this month from the Fed and the ECB. So those stimulus hopes helping out animal spirits to an extent. Keep in mind, there's still a huge amount of unknowns. How will coronavirus play out in major cities beyond what we've seen already? What will be the impact on travel and mobility around cities, working regulations at this point? And what will the impact be on economic growth? And so far, we did see a move south from the OECD on its economic growth assumptions yesterday. 2.4% now is their expectation for this year. That is the lowest level since 2009, down from 2.9% in November. So the market trying to move quickly to reprice some of these different scenarios. At this point, we've got a bounce 2.6%. Some of this actually coming from the Italian market, one of the stronger ones of the Italian indices today. But that said, following closely behind the German stock market, finally parking its negative streak. It's been down for 8 straight sessions, finally getting a bounce of about 2.4%. And just behind those gains are the FTSE and the French market. Let's just dive into the sectors and see what we are witnessing. These percentage gains, fairly extraordinary if you look at some of the worst performers on this chart, still up more than 2%. So it is a broad sweep into the green. Autos, media at the bottom end, at the top technology, very strong bounce of more than 3% and going with the financial services. In terms of the individual stocks, Here's how it plays out. We've got a couple of mining stocks to show you. You've got Antofagasta, Anglo American on that chart. In terms of the top performers, Kiogen on the news flow that there may be a deal in the works to buy this company. You've got a Greco moving higher on the early part of the session, a bounce of 8%. And HelloFresh, this is the delivery kit system. There is a view that if there is a lockdown in some of the major cities, then delivery systems and, of course, a recipe meal kit delivery company may be one of the beneficiaries, 7+% gain. But some of the weaker ones, AB InBev, still trading weaker again today, 1.1% south. There have been concerns around its business, the brewing business that stretches across Asia and, of course, other markets. A bit of weakness in Greg's today, and also Pearson just below the flat line. Jeff.
Terrific, Karen, thank you. Global finance ministers and central bankers will today hold a conference call to discuss possible coordination in response to coronavirus. CNBC has learnt the call, scheduled for 7 a.m. Eastern Time, that's 1300 CET, will be led by U.S. Treasury Secretary Steven Mnuchin and Fed Chairman Jerome Powell. However, a Reuters source says while the group is drafting a statement on countering the economic impact, it does not specifically call for coordinated interest rate cuts by central banks. Wouldn't it be terrific if everybody had a dial-in number? You couldn't actually ask questions, but maybe you could just listen? Because would it be like Steve Mnuchin saying, okay, guys, how much are you in for? How much are you in for? Let's see if we can put this together and get a deal that works.
Well, that assumes they've already got numbers. They've already coming to the table with an action plan rather than it being a discussion about what to come up with. So I wonder whether we're at that point at this stage, given all the unknowns of coronavirus.
But aren't we still in that? I mean, apart from the Swedes and one or two ECB members now who dislike the direction of travel, and the Germans have always had this view, aren't we still in that world where everybody believes it's the right thing to do to continue creating cheap money to flood the global economy to prevent the cycle from giving us a recession?
I think there's a hope there's going to be a handover to fiscal spending, don't you think? That you're going to see finally a change from monetary to fiscal policy. But, of course, if you look at the Germans, there's been a real stumbling block. You need to have a genuine downturn, a recession, an event that would trigger a change in psychology, and perhaps this is that very event. There's certainly been pressure from a number of quarters of the world for the Germans and the Dutch, those who can afford it to spend. Just see whether this is going to be that catalyst.
The posturing from politicians is going to be off the Richter scale, ludicrous, exponential. I mean, you've got Rishi Sunak now, who's basically just been landed this job as the new Chancellor of the Exchequer. He's got the budget on the 11th of March. I think you're down for that one, Jeff. No, that's just me. And the fact of the matter is, Boris Johnson's just going to walk over from number 10 Downing Street to number 11 and say, Rishi, old chap, just stick a naught on the end of that over there. Another naught over there for the north of England. And that's what's going to happen. They're going to paint this as a reaction as well. But we all know whether it was Mr. Hammond or the Sajid Javid or now Rishi Sunak, the numbers had to be big after this election to justify and to pay for those votes that happened and went towards the Tories from Labour in the general election.
And I guess we get a reflection of that everywhere else. I mean, the Italians have already put their cards on the table. We'll have 3.6 billion euros, please. Thank you very much for our stimulus.
Well, I reckon academics around the world must be very excited about stimulus because academics love stimulus as a whole. Let's ask an academic. Richard Portis, Professor, he's shaking his head. Professor of Economics at London Business School. Oh, come on, you know. If you ask 100 academics if they like a bit of fiscal stimulus, 101 of them will say yes.
Academics love conservative central bankers, inflation targeting, all that sort of stuff. Okay, no, that's monetary. So on this occasion, there's dealing with coronavirus, there may be some fiscal stimulus called for. It's a very unusual situation in some ways. We think about demand shocks and supply shocks, okay? Demand shock, yeah, monetary and fiscal policy, sure. Supply shocks, it's micro. The trouble is with this one, it's both.
Yeah.
And I think policymakers are still trying to figure that out. The result will be a lot of volatility in the markets because people don't know what they're doing.
Do you think, and again, we can debate Japanese levels of debt to GDP compared with, say, German levels of debt to GDP, two huge trading surplus nations with two very different sovereign debt profiles. Is there a path between the two which you think the world should negotiate, which is higher than the current level of spending or lower than the current level of spending?
Oh, I think for both Japan, well, certainly for Germany, there's plenty of fiscal space. We know that. Everybody knows that. Even German policymakers know that. The German public doesn't quite understand that in general. Japan is a different story. Japan, although most of that debt is held by Japanese, you have to keep that in mind. So it's not as if they're exposed to some foreign
This is my
shock.
final point. This is the whole Reinhardt and Rogoff, probably Porter's argument as well, that if your debt is held by a domestic captured audience, it doesn't matter what the level is. It only matters when there is an international investor who can leave the party.
That is the main story, yes. I think that's right.
Richard, let's just pick through any potential fiscal spending program, because we have seen crises before, and in those situations it was about getting consumption back up and running, so certain demographics that you would target, trying to get that initial pop to lift GDP, and then you'd see a spill across to other areas. I mean, back in the financial crisis, it was tackling the banks with equity stakes, that sort of thing was where you saw some of the intervention. This time round, if you were to come up with a formula to have the first reaction when GDP starts to respond on the back of coronavirus, say there's been lockdowns in cities like what we've seen in China, where do you target that stimulus?
It has to be micro-targeted.
But what's micro-targeted?
Well, towards specific sectors. And in a way, monetary policy might be the right way to go at that. For example, loan programs for specific sectors of the economy. Take Italy, where we have this a major problem that has ramifications well beyond Italy, by the way. What we now know, we didn't know before, is that Italy is a key part of the supply chain for Northern Europe. And if these Northern Italian firms aren't producing, the effects ripple on. So targeted fiscal measures towards those sectors that need it. You can't do much about aviation, for example. That's just going to be hit, is being hit. But you can do something about firms in particular, firms that are hitting liquidity problems, firms that need assistance and in order to keep production going. It's the supply chain issue here that I think has to be dealt with. And you can do some of that with fiscal. But general fiscal stimulus, we're seeing a slowdown in consumer demand. Yeah, what are you going to do? Trump.
Tax cuts?
Tax cuts. Come on, give me a break. That is not the way to go. And it will not have a significant short-term effect, which is what you want. I mean, what I think most people will believe is that this is going to be a V-shape pattern. The bottom of the V will probably be in the second quarter. Then there'll be a recovery. How deep the V is, we don't know. But tax cuts are not going to have any immediate effect to do something about that V.
Professor, let me pick up on something my esteemed colleague said, though. Do we abandon the kind of lending discipline that we imposed on the banking system of Europe post the financial crisis? Do we relax that for the sake of extending loans, allowing credit to zombie companies and others that potentially could go to the wall as a result of this economic shock? Do we just throw that out of the window and say, it's okay, it's coronavirus, it doesn't matter?
No, I don't think we should. Absolutely not. Propping up zombie companies has been going on too long. And if this event produces a shakeout in that way, in that regard, that's probably an unintended positive effect. But we should be propping up companies who are hitting liquidity problems and supply problems and so on and so forth. That we should be doing, the authorities should be doing. And I don't think we need worry about loosening the regulatory discipline on banks. You're not going to see any relaxation of capital requirements, that sort of thing. It's not going to happen.
Let me ask you a broader question. We have this tweet from the president. He's been wading in. The Australians are showing us the right way of doing it. The Fed needs to step in line and start cutting rates. At this point, when Jay Powell came in, we thought he was carved of the Volcker mold. He will do what he wants to do and hang the market. He's capitulated, it seems, and now seems to be much more responsive to declines in stock market prices. Is the Fed heading towards the lower bound now?
I'm concerned about what we used to call the Greenspan put. I don't want to see it become the Powell put. I think that would be very bad. If the monetary policy should not be reacting to what's happening on Wall Street or the FTSE. That's bad policy. Whether a monetary policy stimulus would be useful in current circumstances is another matter. And that wouldn't be, if you judge it to be, again, I would think it should be targeted in some way. It's hard to do that in the United States. The ECB can purchase, for example, securities of individual corporations. That might be a way forward. But a general monetary policy stimulus right now, again, I don't see as a major contributor to getting out of this mess.
Have we now skewed the curve on interest rates? Because if we get a whole bunch of central banks cutting rates, we had Australia, maybe it'll be Canada later on this week, and effectively we've had central banks trying to hold the line a little bit for a genuine crisis. If we're cutting now and then we see a recovery, we see a fairly decent bounce back, do we then have a situation where you've got central banks needing to claw back those emergency cuts to bank some ammunition for the next crisis? So we're going to be a very stop-start, very jagged line when it comes to rate moves.
I think that's a very reasonable summary of the situation. I would not like to be a monetary policy maker right now. I think it looks likely that there will be, if not a coordinated and more or less simultaneous cut across the major central banks. Interestingly, they've canceled their normal monthly meeting in Basel, scheduled for this coming weekend. So they'll have to do it on the phone. But they can do it on the phone, obviously. And I think we will probably see some monetary policy initiative, but it'll be more psychological in its effects than anything else, not for its effects on the economy.
Professor, we're going to wrap it up with you. Thank you so much for coming and seeing us this morning. Good to catch up.
Good to catch up.
I need to apologise for defaming all academics as loving the extra stimulus.
No, it's just not true.
Just the ones who write long letters to the FT, yeah?
No. We didn't even get on to the Brexit negotiations, did we? The trade negotiations. For another time.
It's another the trade issue, by the way, which we haven't talked about in this coronavirus thing, is a big one. If you're looking at what's happening to international trade right now, it's looking like just what happened exactly after the crisis of autumn 2008. It's falling off a cliff. And that, aside from the hits to consumption and investment, that is, I think, one of the big danger signals.
Well, thank you for cheering up the audience for us once again.
About that.
Professor Portas, we've got to let you go, but we're having you back in to talk about the trade negotiations, because I think that one's going to run for the next 11 months, isn't it? Yes. Professor Richard Portas, he joined us from the London Business School. He is, of course, a professor of economics.
Coming up on the show, McLaren Automotive gears up to debut a new car. The CEO, Mike Fluent, will join us shortly with that big reveal.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
The free Poshmark app now and use offer code LOVEPOSH. We are the dreamers. We come in a variety of colors
and styles,
a variety of sizes,
we come in different patterns
and different materials.
We are the dreamers.
Achieving your dream can take work.
I just wanted to do a career.
But don't give up.
Changing my life.
Don't ever give up.
Ignore the haters.
They didn't believe that I can do it, and I just proved them that I can.
Independence University.
IU is an online college.
Education online for a better life offline.
So your campus is wherever you want it to be.
Take classes when you want to take classes.
At IU, you receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
You're going to keep that laptop and tablet when you graduate.
And IU's Career Services work really hard to help you get a job.
You've got to have dreams.
Independence University.
Education online for a better life offline.
1-800-967-0542. 1-800-967-0542.
Start your day earlier and smarter. On top of the news.
Political turmoil and the Eurozone heating up.
Global markets.
Stocks rebounding.
Ahead of the game.
Time for this morning's big money stories.
Brian Sullivan, Worldwide Exchange, 5 a.m. Eastern on CNBC. The American spirit. Inherently competitive. Always driven with a hunger, ambition, and an appetite to succeed. The pursuit of prosperity can be unpredictable and thrilling. From breakthroughs to breakdowns, the launches and the crashes. Perseverance is paramount. Knowledge essential.
Good morning, everybody. Welcome to Squawk Box here on CNBC.
That's what drives us. It's in our DNA to provide the information you need wherever you are to propel your dreams forward.
You're watching Squawk Box. We've still got a strong rally playing out across these European markets today. We're plus more than 2% on the FTSE. The French market strong and the DAX about 2.6%. Talk about the German markets where a number of the big auto companies are, of course, are based, and we've seen a fairly strong hit to this sector on the back of coronavirus fears with the reports out of China that sales, production's been disrupted, of course, and we're all weighing up the impact here if you see more cases of coronavirus. Well, this is how the sector is faring today. You've also got a snapback as investors rake their eyes over this sector as well as the broader stocks. Volkswagen 2.2% bounce, Ferrari outpacing 3+%, Porsche 2.8%, but well and truly off the highest from earlier this year.
So we're going to go and talk to McLaren in a moment, and you're going to bring a man in from McLaren. But I was just looking at their sales numbers, 4,806 cars for 2018, up 43%. Wow. From where they were in 2017, 3,340. This car maker has managed to increase sales every year since 2010 in a world where we continue to see challenges for non-luxury and some luxury. It's been a very interesting environment to be a luxury-end automaker.
The question is whether this year might be different. Well, McLaren Automotive is unveiling its latest sports car at its headquarters here in the UK instead of at the Geneva Auto Show due to coronavirus. Mike Flewitt joins us, the CEO of McLaren Automotive. He is at the carmaker's Technology Centre in Woking. Mike, great to see you. It's all about these live streaming events now instead of conferences. Just tell us about the LT that you've unveiled today.
Thank you. Yeah, good morning. So we've taken the opportunity to show the 765 LT, our Super Series LT, and it's our fourth offering in this LT segment, which is very focused, really all about driver engagement. It's more power, lighter weight, more focused chassis. So a real car that appeals to the enthusiast driver. Probably people who are going to use it on track as well as on the road.
Mike, give us a sense of the macroeconomic environment that you're now dealing with because of coronavirus. A number of automakers are concerned about their sales into China, their sales more broadly across the globe, what the demand may look like, not to mention the impact across the supply chain. So what are you dealing with as you bring this new LT to the market?
Well, it is a complex situation, no doubt about that. And, in fact, this morning reflects that. We would have been in Geneva normally. And Friday, the organisers responsibly made the decision to cancel the show, and in double quick time we've turned around and been able to stage this so we can still communicate globally. But you're right, there is the potential for impact on markets. We're not seeing it anywhere other than China at the moment, and we have seen some subdued demand in China. And there is the potential for disruption to the supply base. Again, we're not so exposed to the China market, which is the one that's been most impacted because we only have a very few suppliers there. But it's a worrying time, and we need to see how things develop. People need to take the sensible precautions so we can minimize the development of this virus and hopefully return to a more stable position quite quickly.
Mike, I'm not a petrolhead, but I like cars. Look, why do you think you're more of a Ferrari type performance on the stock markets, i.e. they've had an amazing time, rather than a Aston Martin, which has been a disaster? Two different business models. I presume you think you're closest to the former rather than the latter.
Well, I would say we're different to both. I mean, great respect to Ferrari. They've been in this business for over 70 years. They've built an amazing heritage and depth of customer base, and we're still in many ways the new boys here. We've been selling cars for 9 years. 2011 was the first car that we sold into this segment. And we've built a very, very focused company, very focused on appealing to people who understand the brand, the technology, motorsport, love driving. We're utterly focused on the segment we're in. We build the best drivers' cars in the world. And I think by staying very, very true to our purpose, we've built that awareness amongst the customer base, and we've built a very loyal customer base. So as we introduce products like the 765 LT into the market, we have quite good confidence that there's going to be strong demand for this product from existing customers and other people who are learning as the awareness grows. So I think it really is about staying true to yourself and building a strong company around those fundamentals.
Mike, we haven't really talked about the oil price, but I just wanted to talk about strength in the Middle East, which has been in recent years an important sales center for you. I wonder if you could just comment specifically. I know you've talked about Chinese demand. Could you just tell us a little bit about the geographical breakdown and where you think there is still resilience for sales?
Yeah, absolutely. Well, it really goes back to the early days, because when we established this company, we took the view that we needed a global spread of distribution. We needed a global customer base so that we didn't become over-reliant on one market. We sell 4,500 to 5,000 vehicles a year. And if we can spread those vehicles across the globe, then as one market is maybe struggling with a challenge, other markets can compensate a little bit for that. So if we look into last year, China played a part, 6 or 7% of our market last year. Biggest market of all was North America, so US and Canada at over 35% of the market. But we see Asia, not counting China, growing very, very strongly as new markets are coming in. Markets that didn't buy supercars before are developing into markets with clients who want this kind of product. And then you've got Europe. Europe is a traditional market. Markets like the UK and Germany are very, very strong as well. Middle East is a little softer now than it was 2 or 3 years ago, but still a good market with real enthusiasts there. So it is very much a global spread of demand that we will play to as other factors come in and impact maybe confidence and demand a little bit amongst the customer base.
Mike, we've got to wrap it up with you, but thanks so much for making time for us. Mike Flewitt, the CEO of McLaren Automotive. Best of luck with the coming year. And as we wrap up Squawk Box this morning, we just note the passing of Jack Welch, the former head of GE, a company, of course, that used to own this business. Thanks for tuning into Squawk Box. Street Signs coming up in just a moment.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right? This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Legendary quarterback, Jerry Rice, legendary receiver.
You ready for your weekly meeting?
Yeah, we're ready.
Let's do this. They stack the deck.
When legends play, they wear Copperfit Advanced Back Pro. Copperfit's best-selling compression back support just got better with new double-band adjustable supports for customizable compression when you need it most.
Since I put this on, I feel so much better. The core is the most important thing. To know that I'm stabilized here. Whatever I'm doing, I can give it 100%.
4 built-in stabilizing supports designed to improve posture and help reduce lower back stress and strain.
You have back pain, and it's affecting your everyday life. do something. If you can find something to help you get back out and be active like CopperFit, go for it. Absolutely. Do not give up.
A high-performance compression fabric infused with the powerful properties of copper, 360-degree flexible mobility, and lightweight, durable construction.
Nothing more painful than having back pains. If you're aching, if you feel like you can't work out anymore, you can. And that's with CopperFit.
Yeah. Well, it's for all of us who still want to be active, still want to compete.
Way to go. That's what I'm talking about. Man, this really does feel good. It feels to me like the fountain of youth.
CopperFit's best-selling back support just got bigger, badder, and better. Call 1-800-813-8804 or on the web at advancedbackpro.com. Get yours now for only $19.99.
We are seeing this does feel good. That's what I've been saying.
Very sharp.
You think it was fair?
In the dollar.
It was fun.
As far as leading this.
Play for the love of the game.
CopperFit. Live limitless.
We've all got something in our closet we can sell. Jeans you don't love? Sneakers not your style anymore? Jacket that's just not your color? Well, on Poshmark, you can put them up for sale in seconds. Just take a photo, set your price, and turn your closet into cash. Download the free Poshmark app today.
Started with working with Policy Genius to figure out what plan would work for me, and if it was true that I was paying too much. I saved about 20%. Not only did I save 20%, but I got extra coverage. It just feels like I could take a deep breath and sleep well at night.
Life Room by Four Seasons, where outdoor living meets future technology. No matter your style or budget, Four Seasons has got you covered. Simple shade from the sun? Covered. Outdoor dining and style? Covered. Need additional living space? Oh yeah.
The station you're listening to is experiencing technical difficulties.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit tunein.com/premium to upgrade.
Taking another swipe at the Fed.
Travel and leisure recovers after a torrid week as Scandinavian Airlines, British Airways, and Ryanair continue to slash capacity to affected countries.
And BMW CEO Oliver Zips tells CNBC he is keeping a close eye on the impact of the endemic, but adds his company is operating as normal despite the outbreak.
On the supply chain side, we don't see any larger interruptions yet, but we are monitoring the situation very closely, and we will see what is happening, but currently all our plans are working as planned.
Well, a very warm welcome to Street Signs. Global finance ministers and central bankers will today hold a conference call to discuss possible coordination in response to coronavirus. CNBC has learned that the call, scheduled for 7 a.m. Eastern, that's 1300 CET, will be led by U.S. Treasury Secretary Steven Mnuchin and Fed Chairman Jerome Powell. However, a Reuters source says that while the group is drafting a statement on countering the economic impact, it does not specifically call for coordinated interest rate cuts by central banks. Nevertheless, European markets are surging this morning following Wall Street's lead yesterday. You can see here the DAX, the main benchmark in Germany, up 2.2%, the CAC 40 up 2% as well. And over in Italy, the FTSE MIB staging a very strong recovery, up 2.2%. This, of course, follows yesterday when we saw Italy underperform, in particular the Italian banking sector, as concerns around the impact of the virus weighed on sentiment there, the impact this could have on bank balance sheets. But across the board here, we are seeing strong gains in the European session. Let's get a closer look at what's behind the gains sector-wise. You can see here we've got green across every single sector. Chemicals leading the way higher, so a more cyclical part of the market up 2.7%. Financial services up 2.7%, real estate, healthcare, technology. So fairly mixed picture when it comes to what's actually leading, and very, very widespread strength being seen here. Banks up 1.6%, autos up 1.3%. Let's get a look at airlines, which of course have borne the brunt of the selling that we've seen in the wake of the onset of coronavirus. This morning, even the airlines are rallying. Lufthansa up 6%, Ryanair up about 1.7%, Air France KLM up 4%. So very sizable gains in the airline space, which is very interesting to see, given they have really suffered very strongly as investors try to wade through what the coronavirus means for the economic outlook in Europe. Let's take a look at tech stocks. Yesterday, a very strong day for tech in the U.S. We saw Apple shares rally 9%. Very strong gains there. And now you can see the tech space in Europe following suit. ASML up about 3.5%. Dialog Semi up nearly 4%. So very strong rebound in tech this morning. And let's take a look at European banks. I mentioned the pullback we saw yesterday in Italian banks, which dragged down that whole Italian index. Now this morning, we are seeing widespread gains in the banking space, including those Italian banks. So despite the fact that there are concerns around the Italian banking sector, investors putting a lot of weight in what central bankers and G7 finance ministers could say later on today. So you got Unicredit up nearly 2%, Intesa Sanpaolo up more than 2%. And let's take a look at the Dow. A lot of this strength started on Wall Street. If you just follow me over here, I'll show you the Dow, which ended more than 5% higher. So very strong gains for the Dow. That is the best day in nearly 11 years for the Dow in terms of percentage gains, the level 1294. So very strong day on Wall Street, kicked off by these expectations around central bank and finance minister's commentary today. Let's take a look at the Asian markets where things closed in the overnight session. The Shanghai Composite up about 74 basis points. The Shenzhen up more than 1%. So a lot of that strength that we saw come through on Wall Street did filter through to the Asian session. The Hang Seng, though, ending a touch in negative territory, but overall green for Asian markets as well. Shimana?
Such a strong start to the European trading session. Well, let's talk about why, Juliana. The European Central Bank has vowed to, quote, take, quote, appropriate and targeted measures to stem the economic fallout from coronavirus and stop the Eurozone from falling into a recession. The statement by ECB President Christine Lagarde follows a series of similar announcements by the leading central banks. Fed Chairman Jerome Powell said the U.S. Central Bank would act as appropriate to support the American economy, while the Bank of Japan's Haruhiko Kuroda has promised to inject sufficient liquidity into the market. The Bank of England also vowed to work with partners to guarantee stability. The chorus of promises has fueled investor hopes of a coordinated policy response to the virus. And of course, all eyes will be on that call that's taking place in a couple of hours' time. Let's get out to Annetta, who is in Frankfurt. And Annetta, as we are speaking, President Christine Lagarde is chairing an executive board meeting, an extraordinary one, given the circumstances. And I've got to say, just looking at what's priced into the interest rate curve, the market wants the ECB to cut next week. There's about 8 basis points priced in. This despite many conversations we've had over the last couple of months suggesting that there's not much firepower left in the ECB toolkit. So what can they actually do here?
Well, actually, if you look through the statement, I think it is pretty clear that their focus is on liquidity. And I would actually go with what Reuters is saying, and that's what I'm hearing as well. It's not so much about a coordinated policy rate cut across the world. It's more about talking together and what each and every central bank can do actually to count that route which we're seeing on the market. So for the ECB, it's not so much cutting rates. It's more to provide ample liquidity. And here we, for example, have the TLTRO instruments, but we have also other instruments available where they could inject more liquidity into the markets, that the financial markets regain trust that the system is not about to collapse. And that's probably the only thing the ECB can do for now, because clearly, what can they do against the virus? They can't do a lot. And they also can't do a lot against supply chain shocks, because clearly that's in the definition. They cannot restore a broken supply chain. chain. What they can do, they can counter demand shocks by boosting liquidity, enhance also demand for loans by small and medium-sized enterprise who might be extremely hard hit by that current crisis. All those suppliers to the big conglomerates are really at the end of the food chain, so to say. To give you perhaps more of a thinking of what the hawks might think on the Bundesbank Governing Council, here's a quote from Bundesbank President Jens Weidmann I spoke to on Friday about what he thinks the central bank can do against the crisis of the coronavirus.
It's important to note that monetary policy is already very accommodative. So in a sense, the provision of liquidity is abundant, interest rates are low. So to some extent, this is already providing some insurance against adverse events. On the other hand, we have to look very carefully at the root causes and the different effects of the spreading of the coronavirus. So are we talking about negative supply shocks? Are we talking about demand effects? And this then will determine, of course, how the inflation forecasts are affected. And at the end, this is what drives the monetary policy reaction. And if you look at negative supply shocks, they can raise prices. So in that sense, the reaction of monetary policy is at the current moment not clear. And I said in the press conference that I don't see any immediate need for action.
So in other words, a rate cut is highly unlikely, at least when it comes to the policy action as of this week, like a crisis answer. But we most likely will get more liquidity operations, as I was saying earlier on. Currently, the executive board of the ECB is meeting. If they were to decide on more action, also the governing council would have to have an extraordinary board meeting. This could also be done via telephone. It doesn't need to be in person. And then, of course, we have that all-important call among the G7 nations at 1 o'clock CET, and that will probably decide more what we hear from the central banks going forward. But one thing is sure, certain, that they have woken up to the crisis mode of the markets, and that needs to be done something to reassure financial markets that it's not a foregone conclusion that we fall into recession worldwide. And that is, I think, the main purpose now of the central bank exercise, to reboost confidence in the markets, that we don't have a self-fulfilling prophecy that the markets are dragging the world economy into recession by, of course, having a very sober, by having a very bad sentiment about how the world economy can go. So as I said, currently executive board is meeting, and then most likely we hear from the governing council at some point in time, and then of course the all-important policy meeting next week. But they don't want to put too much pressure on that meeting, that we might not see a lot of rate changes from the ECB very soon. Back to you.
Yeah, excellent. So much to watch out for, Annetta. The trillion-dollar question here is whether the market will be satisfied with just liquidity measures and no interest rate cut. I guess we'll find out in a couple of hours. Annetta, thank you very much. Now, talking about central banks, let's switch and talk about another one. The RBA has cut interest rates by 25 basis points to a record low. This is to soften the impact of the coronavirus outbreak. Our colleague Matt Taylor is live from Singapore for us. So the first of the corona cutters outside of China, Matt.
Yeah, exactly right, Jemana. And in fact, we've had two here in the Asia-Pacific session today. Let's give you a look at where the Aussie dollar is sitting, because we did in fact see the currency move higher despite that 25 basis point cut that we got out of the Reserve Bank, cutting rates to a new record low of 0.5%. But there had been some talk that we could see a surprise 50 basis point cut from the RBA, but we did not get that. The RBA says the coronavirus has clouded the short-term outlook, in particular having an impact on the Australian economy when it comes to tourism and also the education sector. Once the virus is contained, though, it says that the Australian economy will return to an improving trend, but 65.51 is where we are sitting on the Aussie dollar. Elsewhere, Malaysia's central bank also cutting by 25 basis points as well today, taking its benchmark rate down to 2.5%, which is the lowest level in around about 10 years. Let's give you a look broadly at the Asian market session because we did see a fair bit of green with the exception of the Hang Seng. New Zealand was the best performer today, up by about 2.2%. Australia about 0.75% higher. We were doing much better, a gain of more than 1% before we got that RBA cut and caused a little bit of disappointment out there that we didn't get 50 basis points. Japan also lower today. It was trending higher, but then we saw a lot of money moving into the Japanese yen, which is currently sitting around the 107 level, pressuring the Japanese market lower at the close by 1.22%. Ladies, back to you.
Matt, thank you so much for bringing us the latest from the Asia session. Now, President Trump has praised that Reserve Bank of Australia move while using it as another opportunity to criticize the Federal Reserve. The U.S. leader tweeted that it was, quote, sad that the Fed could not follow the RBA's lead and that Chairman Powell had called it wrong from day one. Now, Liliane Chauvin, multi-asset strategist from Coutts, joins us around the desk. Thanks very much for joining us this morning. So markets surging over the last 24 hours in the lead up to this G7 finance ministers and central bankers teleconference. In your view, how much can central bank support actually provide a cushion for markets here? And is this market reaction the right one?
Well, I think it was to be expected after what we saw last week, so no big surprise here. The move yesterday in the U.S. was quite strong, but so was the down move last week. I think central banks, we have to be cognizant they can't do much about what's causing the fall in markets and the volatility, which is the outbreak of the coronavirus. What they can do and what is very important is to make sure liquidity is ample and goes in the system. What you don't want, and we are watching very carefully the credit market, you don't want market sell-off to cause tight financial conditions, which then would create trouble and headwinds for the real economy.
And when we talk about rate cuts, as you mentioned, the focus here for markets seems to be on liquidity more than rate cuts. But then you have President Trump again calling attention to the RBA. How much more effective does a rate cut become if it's part of a coordinated effort versus an individual standalone rate cut?
So I think you're going to see the markets, what they really expect, obviously, is liquidity provided by central banks. What people will focus on is the fiscal stimulus, the fiscal side of the stimulus. And you've had a call from French finance minister yesterday talking about a coordinated, synchronized fiscal stimulus. That would be very, very powerful. But in the short term, unfortunately, not much can happen until you have this containment and this sense that the worst of the virus outbreak is behind us. And we're not there yet. If you look at the UK, France, the US, numbers are still very low. You saw in Italy, numbers went from 1 case to 2,000 in the matter of, 2 weeks. So we should expect the same for France and maybe other developed countries, UK, US. And it's hard to see markets really surge, with this background. So we have to be a little bit patient. But if we finally get financial stimulus synchronized, that's probably a very positive thing for markets.
Isn't there too much baked into interest rate markets now? Looking at what's priced in and the discussion we just had with our ECB correspondent, there's 8 basis points of a cut priced in for the ECB, 50 basis points priced in for the Fed. There's some expectation that they may actually cut beforehand. And yet the language out of these central bankers is that they want to lean on more on the liquidity side of things, perhaps engage in targeted LTROs in Europe, and perhaps provide more liquidity via repo operations in the U.S. Isn't it inevitable that markets are going to be disappointed given how many cuts are priced in now?
Well, I think what is very tricky at the moment is no one really knows what the impact is going to be from this outbreak. No one really knows because it's still ongoing. So you have a lot of expectations starting to be priced in, but at the same time, we don't know. So yes, you're right. Some market, the rate market is pricing it very aggressive rate cuts in the U.S. by the end of the year. If that needs to be repriced, it doesn't necessarily mean you're going to have a massive shock on the equity because it has to be proportionate to what other measures do. So if you have a fiscal stimulus or fiscal measures announced at the same time, you could have less potential repricing on the market.
All right, Liliane, thank you for your thoughts. Stay with us. More to discuss after the break. To learn more about how the virus is impacting the already weakened Italian economy, check out the op-ed. Italy, the sick man of Europe, tries to administer its own medicine. That's available right now on CNBC.com. Coming up after the break, French unions are expected to hit the streets again, angered by the government's decision to force through a controversial pension overhaul. Stay with the program.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade. Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Learn more at vikingcruises.com.
I've pulled your credit and I've got some bad news. We're going to pass on that loan.
What? You just said a second ago I was fine.
Oh, yeah. That was before we saw the negative items on there.
Wait. Negative items? That doesn't sound right.
You know, it's like they say, bad credit is forever.
That sounds made up. Kind of like these items on my credit.
Well, just because you haven't heard of it doesn't mean they don't say it.
They say a lot of things about credit. We say enough is enough. Try something new, starting with a free credit evaluation from creditrepair.com.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
Do you worry about going to the dentist? After all, a visit to the dentist can easily cost $2,000 or more. Well, relax. The Carefree Dental Card is now available in your area. Call now and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. Activate your card and you can start using it immediately. From exams and cleanings to more expensive procedures like crowns, dentures, even braces, they're all included with the Carefree Dental Card. Say you go to the dentist today without any card and your bill is, well, ouch. Wait a minute, let's try that again. You go to the dentist today and show your Carefree Dental Card, you save $525. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit. Call 1-800-478-0809 now.
Next on Squawk Box, coronavirus fears, market volatility, dilemmas for investors. Should you buy, sell, or sit tight? Some strategies to get you through the turmoil. Squawk Box today, 6 a.m. Eastern. Watch and listen live on the CNBC app.
Welcome back to the show. Well, we just want to bring you some breaking news out of the U.S. here. And Nashville's fire department says it is responding to reports of 40 structure collapses following a tornado in the area. We'll be keeping an eye on further developments, but early reports from witnesses suggested that a fuel tank explosion and planes were on fire at the public airport in Nashville. So we will definitely monitor that situation as and when.
And back to news in Europe, French unions are set to hold a series of demonstrations across the country today after the government bypassed parliament and forced through its pension reforms.
And Europe may be well equipped to deal with the medical challenges of coronavirus, but will struggle to tackle the economic fallout. That is according to our next guest, who also says the continent will see a disruption in the flow of goods as the Schengen area shuts off some of its internal borders. Anna Rosenberg, partner and head of Europe and UK at Signum Global, joins us. It sounds to me like you expect things to get worse from an economic standpoint.
Yes, absolutely. I think when we're looking at Korea, China, what we have seen there, I think the situation is very likely to get worse. And I think we're just at the very beginning. So it is very likely going to cause more economic disruption.
So the big talk today is about this global coordinated cut or fiscal move, whatever we're going to get. We'll find out in a couple of hours' time. What is the point of stimulating if people are physically not going to work and factories are operating at 50% production capacity?
Well, I don't think there's much point, to be honest. I think it will create some short-term positive news, but after all, this is a much more severe economic disruption that is likely going to last probably for H1 at least this year. So we expect that, if we get some rate cuts, if we get fiscal stimulus here and there, which we're skeptical, by the way, to get in like a large amount, that will be significant enough. I think after all, it is a health crisis, and it's unlikely going to calm the situation significantly if we get fiscal stimulus as well.
One of the interesting developments that we were closely observing yesterday is the country that so far has the highest number of corona cases in the Eurozone is Italy, but Italy is also one of the weakest countries economically right now in the Eurozone. How concerned are you that this coronavirus episode could really be the straw that breaks the camel's back, so to speak, when it comes to Italian finances?
I think when it comes to Italian finances, yes, of course, it's a worry. But I do think that the EU is going to be lenient with Italy at this point in time. They're not going to launch a deficit procedure or anything like that. I am worried, though, for the global economy. We have been warning about a possible debt crisis for a while, given the weakness mainly in U.S. corporate bonds. And the trigger that we have been raising as a trigger that could cause the next financial crisis is really a slump in growth, because there you could see an unraveling of U.S. corporate bonds. And if the coronavirus does one thing, is it dents global growth. So that's a big concern that we're having.
Anna, looking through your notes, one thing that stood out to me was the political implications you see from the coronavirus outbreak. Lillian, in Anna's research, she's concluded that this could actually have a positive impact on political relations within Europe, and that could have a positive impact on UK-EU relations when it comes to Brexit negotiations. What's your take here? Does that make sense to you?
Well, it's a little bit difficult. I mean, if you think about the trade negotiation that is starting now between the UK and EU, I kind of feel we have lost momentum compared to last year. It has to restart. The stance taken by the UK seems to be fairly hard. We have to see if this outbreak is going to make things better between the two parts. I'm not sure really. What it's going to do is that it's going to put that negotiation more in the background. It's not going to be as much in the headlines as it would have been otherwise. So maybe it's for the better. But I'm not sure it's going to create, they're not going to want to really give up on their red lines just because there is a health crisis in Europe. So that is still going to have consequences for the UK and Europe.
The irony is that this has just happened on the heels of another Eurogroup meeting last week, and the leaders met together and wanted to agree on a 7-year budget, couldn't come to an agreement last Friday, and then all of a sudden, 24 hours later, 48 hours later, we're talking about global coordinated fiscal response, government response. Where was that intention last week? It was only a few weeks ago that we were just talking about the 7-year budget and they couldn't agree on anything.
Absolutely. But that's mainly for internal show, right? It's to show taxpayers we are looking after your money. I think the point here that what we know about the EU is it reacts when there are real crises, right? That's when it reacts fast. So I do think that there is a political upside from all of this. I think I agree that the tensions with the UK and EU without coronavirus are pretty extreme, and it's not going to be a positive outcome. In the most likely outcome, we expect mini deals. But I do think that the trade tensions across the world are likely going to subside because there's this health crisis that we're facing. And so there is a political upside, and I do think that will also manifest itself by the time the EU meets again to decide on the 7-year budget. And I think at that point they'll agree, they realize, okay, we've made the show, now let's just move on.
And just very quickly, what's left in the ECB's toolkit that we could see them come out with that would give markets some comfort here?
I don't think there's much left. I mean, we could have some more rate cuts, but I mean, we're already in negative territory. They're not going to have a significant impact. I think the whole point about appointing Lagarde is that she has political firepower. She's going to step up the pressure on the countries to step up fiscal stimulus, and I think that's where we're heading to.
Anna, thank you so much for joining us this morning. Anna Rosenberg, partner, head of Europe and UK, Signum Globa, and Lillian Chauvin stays with us.
And we'll be right back in just a few moments. We'll leave you with a shot of how energy prices are faring, also in the green, as per all other European markets. We'll be right back.
Uh-oh, there you go. Slow slicing fruits, veggies, and those stinky onions that bring you to tears. But not anymore. Introducing NutriChopper, the compact handheld speed slicer that cuts up to 10 times quicker than a knife. Watch. You can have one slice or 10 perfect slices at once. Amazing!
You can just julienne, or you can bundle slice julienne sticks at lightning speed. With NutriChopper, you can slice the entire onion, or mince a mound of onions and never have time for tears. Why slice a single apple wedge when you can wedge it all in one snap? NutriChopper comes with the razor-sharp interchangeable stainless steel blades you need to make all of the cuts you want, and all incredibly quick. Chop thick slices, chop thin slices, chop cubes, chop sticks, and wedge whole fruits and vegetables in just 1 second. Slice it and cook it right in the pan, right on your stove. Chop and slice right into the pot for a family-sized stew with no mess. Snap and slice a fruit salad for the kids right into the bowl in seconds. Slice up a healthy salad for a quick and easy meal on the go. Cube meats and cheeses quick, in a snap. And NutriChopper comes with a perfect portion container and fresh-keeping lid so you can slice it, seal it, and store it all in one. To clean, simply rinse or rack it in the dishwasher. Then lock it to store it safely in a drawer. And now the NutriChopper with the thin slice, thick slice, wedge, and cube blades, and the slice and store container and lid, a value of over $40, is yours for just $19.99. But wait, order now and we'll even pay the shipping for you. You get the complete NutriChopper set with blades and container with lids, all for just $19.99 with free shipping. Here's how to order.
To order, call 1-800-257-9942 or go online at NutriChopper.com. That's 1-800-257-9942 or go to NutriChopper.com. Order now.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
I like to buy hysteria, not sell it. I like to buy panic, not sell it. We are trying to make sense of things for you here tonight in the face of this incredibly difficult but panicky tape. Watch or listen live on the CNBC app.
Welcome back to Street Signs. I'm Juliana Tattlebaum.
And I'm Shimana Bersachi, and these are your headlines.
Back with a vengeance, European stock markets rebound sharply after the Dow posts its biggest point gain ever, with miners and tech stocks leading the rally.
European financials also firmly in the green after the world's top central banks say they are ready to counteract the impact of the outbreak. President Trump praises the RBA's rate cut, taking another swipe at the Fed.
Travel and leisure recovers after a torrid week. As Scandinavian Airlines, British Airways, and Ryanair continue to slash capacity to affected countries.
And BMW CEO Oliver Zipse tells CNBC he is keeping a close eye on the impact of the pandemic, but adds his company is operating as normal despite the outbreak.
On the supply chain side, we don't see any larger interruptions yet, but we are monitoring the situation very closely, and we will see what is happening, but currently all our plans are working as planned.
All right, we're just getting some data out of the UK, construction data this time. The February construction PMI number has come in at 52.6. This is a big jump versus 48.4 that we had in January.
And this comes after yesterday we got the UK manufacturing PMIs come in at 51.7 for February. That was slightly weaker than the flash, but some warning signals there around the supply chain disruptions emerging in the UK. So now we've got these construction numbers coming out showing UK builders have returned to growth after the election. So that's the latest in terms of UK data. Let's get a check now on broader markets. Jemima?
Yeah, and we've got to see how much that strength actually lasts for, especially with the impact of coronavirus that we've been talking about consistently the last week or so. But Let's talk about markets. A lot of green on the board. All of the European bourses are trading nicely up in the green after a somewhat lackluster session yesterday. But of course, the handover from Wall Street overnight, very strong. The biggest jump for the Dow in about 11 years' time. So this is the picture for Europe. We've got FTSE 100 just above 6,800 now, about 150 points higher, 2.2% firmer. We're also awaiting news from the UK government about specific coronavirus measures that they will be introducing and recommending for people to do. So keep an eye on that. That will be coming out later today. In Germany, we have the DAX index up about 2.6%. And here we're seeing some of the companies that got beat down a lot in the last week recovering. So some of the travel names, Lufthansa, for example, is staging a bit of a rebound. Some of the industrials also trading up in the green this morning. CAC 40 up 2.3%. Here, luxury is also staging a bit of a comeback today, up about 2% for that sector. And then Italy, we were very much focused on the FTSE MIB yesterday. It was one of the few spots of red on the board. And that was because obviously Italy is the highest number, has reported the highest number of coronavirus cases in the Eurozone. There's some concern that this is going to have a deep economic impact, particularly on some of these smaller companies there. It is a very SME-based economy. But what we are seeing today is a rebound in that overall index, and some of the Italian banking names that got hits yesterday are recovering. Names like UniCredit up about 3.5 percentage points, UBI Banca up a similar amount as well. So some stabilization for European markets. Let's talk about currency markets here. And let's not forget, it is a big day when it comes to coordinated action expectations. We have the G7 call, finance minister call, that is taking place in a couple of hours' time. There's also an executive board meeting being tabled right now by ECB President Lagarde. So keep an eye out for potential liquidity measures and interest rate cut measures that could potentially be announced. Obviously, will be very significant for currency markets here. Euro, we have trading slightly on the back foot, down 0.2 percentage point. The ECB did release a statement yesterday saying that they were looking at the coronavirus very closely and were ready to use all measures. So let's take a look and see what happens with that in a few hours' time. Dollar yen, we have a flight to quality bid going into yen. So Safe Haven doing quite well this morning, 0.3 percentage point firmer versus the dollar. And then the pound, we have trading slightly firmer versus the dollar. But let me talk about interest rates as well, because of course it is a central bank day, Super Tuesday, but Super Tuesday now, not just for US politics, but also for the central banking community. Bit of a mixed bag, but you can see that overall, in light of the equity comeback that we're seeing, fixed income is coming off. So we've got 10-year bonds off about a couple of basis points, down at minus 59 here. It was trading a firmer in yesterday's session. Italian BTP is staging a comeback. Remember yesterday when we were talking about Italian banks coming under pressure, Italian spreads were widening versus Germany. So today we are seeing a comeback for Italian bond yields. Gilts also coming under pressure, selling off a little bit. And then the Treasury, the 10-year Treasury, is now back at 115. Remember, it was just, I think, yesterday morning, overnight, that the 10-year note briefly broke its all-time low, breaking through 1.04. So we've come back a lot in the last 24 hours, again, on optimism as we head into today and that all-important G7 call. All right, let's take a look at U.S. futures as well. And the futures are pointing to a moderately positive start for the three majors. We've got S&P seen opening up about 2 points higher, Dow about 40 points higher, NASDAQ about 2.5 points higher. This after a stellar day yesterday with those markets really jumping north of 4 or 5%, and the strongest gains actually that we've seen in more than a decade. So we'll see whether that momentum will continue. Investors are definitely quite nervous ahead of what could happen this afternoon.
Porsche has revealed the latest version of its flagship 911 series vehicle in Germany. The car maker had planned to unveil the car at the Geneva Motor Show, but the event was canceled last week due to concerns over coronavirus. Oliver Bloom, CEO of Porsche, joins us now down the line. Thanks very much, sir, for being with us. I know it must be disappointing to see the flagship auto event canceled over these coronavirus concerns. Share with us some detail around the launch of this new series, and also just give us a sense of how business is going more broadly for you.
Yeah, hello, good morning. Oliver Blume from the Porsche Design Center in Germany. And we are presenting the new 911 Turbo S here in our design center instead of being in Geneva. from our side, we have full respect to the decisions they have taken in Geneva, and we think safety first. And so we were very flexible to organize it today here in our engineering center of Porsche in Germany.
And Oliver, what kind of impact, if we look more broadly at coronavirus, has this outbreak had on your business? Clearly, Geneva Motor Show was just one instance, but perhaps trivial in the context of things like supply chains.
Yeah, first of all, we closed all our dealerships in February in China, so it has a sales impact. We are now opening our Porsche centers in China and see a better situation in March. Looking to our supply chain, we are still stable, but it's a big challenge for us, and we are doing daily monitoring on our supply chain.
And can you talk to us more broadly about the demand outlook that you have penciled in for 2020? Because it's not just the supply chain that people have been talking about in the context of the auto industry, but also demand for vehicles this year. And in this type of environment, even before coronavirus, there was definitely a slowdown in demand, a slowdown in vehicle sales. How do you see things transpiring, particularly in Europe this year?
I think worldwide it's too early to say what situation will we have at the end of the year. We have to wait how will be the coronavirus limited in the next week, and that's our hope. In Europe, we have still a stable sales situation, and we think step by step and watching what will happen in the different areas of the world.
Today, very exciting. There's a new 911 coming to the market, but one thing I noticed is it's not electric. I'm a little bit surprised, given that most of the industry is moving in that direction. Why are you not looking to make the 911 electric?
For us, it's very important, our product strategy, and we are going for a mix in between very emotional combustion engines, plug-in hybrids, and very modern electric cars. Last year, we launched our first full electric car, the Taycan, and now we are coming with the core of our brand, the 911. And I think to drive Porsche for the next decade, it's a right decision to go for this mix, because the different areas of the world are developing in a different speed, and the 911 stands for our brand, is the core of our brand.
Speaking of electric vehicles, the pioneer of electric vehicles in the Western world, Tesla, climbed 8 spots in the Consumer Report's latest auto brand rankings. You guys hold the top spot, so still a ways off. How much of a threat do you see Tesla to your business?
I have a lot of respect what Elon Musk and Tesla are doing. It's very innovative, and they gave a big push to electromobility in the automotive sector. And Porsche isn't worried about competition. We love competition. We come from the racetrack, and so it's very challenging to be together with Tesla. And when we started to design our first electric car, our challenge was to build a car which you can drive like a 911. And when you look at the Taycan, I think it represents this kind of Porsche. The Taycan is 100% Porsche.
Oliver, thank you so much for being with us this morning. Oliver Blume, CEO of Porsche.
Well, we spent a good chunk of the morning talking about the central bank's likely response to coronavirus. I just want to take you now to some live footage that we have of Mark Carney, the outgoing Bank of England governor, testifying before the Treasury Select Committee. Just to bring you some earlier comments that he made just a few minutes ago, he says that the Bank of England will ensure all necessary contingency plans are in effect with combating coronavirus. They will take all necessary steps to support the UK economy and financial system consistent with its statutory responsibilities. And the Bank of England has also said they have spoken with the new finance minister, Mr. Sunak, on coronavirus and are in frequent contact with international peers. So let's take a listen now.
Time that over the next 5 years, one of the main policy challenges would be to, and I quote, design, implement and ultimately exit from unconventional monetary policy. And yet here we are 7 years on, bank rate is barely higher. The scale of asset purchases has risen with no sign of withdrawal on the horizon. And so can I ask, are you disappointed that monetary policy has not achieved escape velocity, as I think you used to term it, and what the explanation for that might be?
Well, I would say the disappointment, thank you for your opening comments first. The disappointment is that the global economy remains in a relatively low growth, certainly low inflation equilibrium, verging on a trap, and we may come to that. And the consequence of that is that bank rate has had to remain very low in order to support activity and to achieve the inflation target. What has remained, there are major structural forces that have kept down the equilibrium rate of interest. In other words, the rate of interest at which the economy would operate at full capacity and inflation would remain at target, absent any other shocks. And of course, there never is a situation where there are not shocks, but conceptually that is right. So structural forces, longer-term forces around demographics, the changing nature of the global economy, lower productivity, those factors have weighed on so-called R-star, that equilibrium rate. In addition, in the United Kingdom, for most of that period, we have had two additional shorter-term factors, a sustained period of fiscal consolidation, which has provided a headwind, and monetary policy has lent against that. And then for a period, a very elevated degrees of uncertainty associated with determining our future economic relationship or full relationship with the European Union. As a consequence of those factors, it has been appropriate to keep bank rate low at historic lows. The committee made a judgment very early on about, I think my testimony was in February of 2013, first to this committee, before I took on the position. In our February 2014 monetary policy report, or then called inflation report, we outlined some of these structural forces, and our judgment as a committee subsequently developed and certainly reinforced that we expected this equilibrium rate to remain low for a period of time, and hence there was guidance around limited and gradual rate increases when and if they came. I think one of the things that bears consideration is that inflation outcomes. So we have kept rates very low. Following the referendum, we provided additional stimulus through asset purchases, as you referenced. The combination of all of that has helped keep the economy at equilibrium. The rate of unemployment has been more than cut in half. 3 million net jobs have been created over the course of that time period, and real wages have finally started to increase. But average inflation outcomes over the whole of that period is about 1.7%, which reinforces, and so I'm not talking about any specific monetary policy decision, any given one, but the overall stance of monetary policy has been broadly in the right direction. You could argue it's been a little tight on average in retrospect, but it validates the judgment, the big judgment of the committee has made that equilibrium rates are low, and as we sit here today, it remains the view of the committee, and I very much share it, that they are likely to remain low for some period of time.
And what would you say were the main successes and failures of monetary policy during your tenure? And do you think we're in a position at the moment where interest rates are so low with such limited ability to take them ever lower that monetary policy is actually a lever which, when you pull it, doesn't do as much as you would like it to do? And how much of a challenge is that?
Well, I think that if I can speak of things that have worked well and have been important, I would emphasize first and foremost something that was changed upon my arrival, which was a clarification of the remit of this committee to note that in exceptional circumstances we should deploy some flexibility in the time horizon over which we returned inflation to target. And there was one example given there, which was returning inflation to target from below because of potential financial stability reasons. Remember, back in 2013, the Financial Policy Committee was a new committee. Macroprudential policy was relatively untested, and there was a school of thought that potentially monetary policy would be play an important role in achieving financial stability outcomes. We can, if you wish, come to talk about the role of the FPC, but I think the FPC is proving its mettle. It has been very active and has addressed
All
a
right,
series
those are
of
comments from the outgoing Bank of England Governor Mark Carney in front of the Treasury Select Committee, talking about the responsiveness and readiness of the Bank of England to act in coronavirus in the situation where things do get worse. They say that they are in contact with G7, G20, IMF, and with the finance ministry. So we should be on alert to see whether the Bank of England actually act up on further measures. Now, also stay with us on the show because we're going to see a show of force. Joe Biden gets several key endorsements ahead of Super Tuesday. We discuss what it means for Biden as he prepares for his showdown with Senator Bernie Sanders. We'll be right back.
Think you need to buy expensive skincare products to see dramatic results? Try Olay Skincare. Just 1 jar of microsculpting cream has the hydrating power of 5 jars of a prestige cream, which helps plump skin cells and visibly smooth wrinkles, while new Olay Retinol 24 provides visibly smoother, brighter skin. For dramatic skincare results, try Olay and now receive 25% off your purchase at Olay.com. Brand power helping you buy better.
Yeah, there's real power in travel. It's a two-sided thing. First is what it does to yourself, because it does give you experiences of other cultures and other people. But also, it lets other people experience you. And I think it helps make us kinder.
Viking, exploring the world in comfort.
A new kind of investor is changing things up. With an app that's changing the way we do money. Download Robinhood now.
Selling on Poshmark is crazy simple. All you have to do is post a picture, add a description, add a price, and you're pretty much good to go. Right now I'm selling Air Jordans and Nikes and Adidas, anything really performance related or style related.
Download the free Poshmark app now.
Do you worry about going to the dentist? After all, a visit to the dentist can easily cost $2,000 or more. Well, relax. The Carefree Dental Card is now available in your area. Call now and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. Activate your card and you can start using it immediately. From exams and cleanings to more expensive procedures like crowns, dentures, even braces, they're all included with the Carefree Dental Card. Say you go to the dentist today without any card, and your bill is, well, ouch. Wait a minute, let's try that again. You go to the dentist today and show your Carefree Dental Card, you save $525. The Carefree Dental Card is just $15.95 a month, so call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit. Call 1-800-478-0809 now.
Could it be a day of snapback or sell-off for investors? What early trading signals reveal for the best moves for your money? Squawk on the Street, 9 a.m. Eastern today. Watch or listen live on the CNBC app.
Welcome back to the show. One of the biggest days in the Democratic presidential race is upon us, Super Tuesday, where voters in these 14 states will head to the polls today. California and Texas have the most delegates up for grabs. The magic number to secure the Democratic nomination is 1,991. Our NBC colleague Tracy Potts joins us live from Washington, D.C. Tracy, talk us through the dynamics now that we've had two leading contenders pull out yesterday, Pete Buttigieg, Amy Klobuchar. How much of a boost is that expected to give Joe Biden, who's also the other centrist candidate going into Super Tuesday?
Well, Jumana, they both endorsed Joe Biden. He also picked up another endorsement from a former candidate. So that gives him momentum going into Super Tuesday, where these 14 states are going to be deciding. This is nearly 40% of the delegates needed to clinch that nomination. Now, Bernie Sanders is the one to beat. The senator is leading national polls. He is leading the delegate count. But as you see here, some of those candidates who've dropped out are not throwing their support his way. They don't think that Bernie Sanders can beat Donald Trump. And so you're starting to see the middle of the Democratic Party, the more moderate side of the Democratic Party, coalesce behind Joe Biden. Bernie Sanders says he's not concerned about that. He is going into this as the front runner. And of course, given what happened last time around, election security is a big concern as well. The Government Cybersecurity Watch Center keeping an eye on things here. But here's the delegate count so far. You can see Sanders has a lead, but that could certainly change after millions of people start voting today.
Really exciting time. Tracy, thank you very much for breaking it down for us. We look forward to your coverage in the next couple of days as well to get those results. All right, let's bring in Lindsay Newman, Senior Research Fellow at Chatham House. Lindsay, Tracy was just talking about how the moderates are coalescing around Joe Biden. We had endorsements from both Buttigieg and Klobuchar yesterday for Joe Biden, but not so much the case on the left. We've still got Elizabeth Warren in the race, even though she has no clear path to securing the candidacy here. What do you think her calculus is? Why is she still in the race?
Interestingly, if you talk to supporters of Elizabeth Warren, they seem to think she does still have a path to the nomination. Because right now, with Super Tuesday, the biggest haul in delegates in any day in the race today, I'm expecting to see a mixed bag of results. Half are going to go most likely to Sanders, half are going to go to Biden. And so Elizabeth Warren and her supporters seem to think if they get to a contested convention, they might look around and think that she's the middle ground between Biden and Sanders.
Lillian Chauvin is still with us, multi-asset strategist from Coutts. Will markets start to pay attention more now with Super Tuesday ahead of us, where a third of the delegates will be decided? Is it the turning point in terms of market consideration?
I think it's still early, but what has changed compared to a few weeks ago is that we're headed towards a more challenged convention and challenged primary. And I had a question, actually. Do you think it's plausible that Biden, if no one gets a majority in terms of delegates, do you see super delegates play a major role like they did in the past? And that was really criticized by Sanders in particular, but others. Do you see that as plausible this time around?
The DNC has changed some of the rules going into this race. So superdelegates still exist, but they don't have as much power as they did in 2016, which, as you said, Sanders was quite critical of the role they played. So if there is a contested convention and then a brokered convention, which means that the first vote doesn't turn up a clear winner, then only then superdelegates can vote. So there's a possibility, but right now we're thinking of a contested convention where there is no there's no clear candidate with a majority going into the race. We're not yet completely convinced of nobody getting the nomination on the first round.
But what about the overall support that eventual nominee is going to get? Because you look at the two leading candidates right now, you've got Biden around the center and you've got super progressive Bernie Sanders on the left. It's unclear whether supporters of either side will support the other candidates. How do you see that panning out? And do you think that could be problematic once we actually enter into the formal election versus President Trump?
The Democratic Party is certainly in the midst of an inter-party struggle for direction and leadership, and we're seeing that. We're seeing that today. I'm expecting more of it after today. When, as I said, I'm expecting states around Vermont and Maine and in the liberal West, California, Colorado, to go to Sanders, and more of the South. So Virginia perhaps going to Biden, but North Carolina, Alabama going to Biden. We're seeing a real divide, and it's an open question whether they're going to be able to come together. Whether the turnout for Sanders is going to go for a Biden candidacy or Biden's supporters are going to go for a Sanders candidacy. And we have to remember, President Trump has 80% approval in the Republican Party and an enormous war chest. they have to be concerned about whether they're disadvantaged going into the general.
Yeah, no, something definitely worth bearing in mind and not to be taken for granted. Lindsay, thank you very much for joining us. Lindsay Newman from Chatham House, and Lilian Chauvin, the multi-asset strategist from Coutts as well. Thank you for joining us on the show today.
And Mark Carney is currently speaking at the Treasury Select Committee. He has said that interest rates are likely to remain low for some period of time. Without question, we have less policy room than historically. And he said that we would not go to negative interest rates in the UK. Mark Carney speaking on a day when central banks are firmly in focus for investors ahead of that teleconference expected among G7 finance ministers and central bankers. That meeting firmly in focus and has been a real support for global markets over the last 24 hours.
I wonder if the Bank of England don't go into negative rates, what tools they do have at their disposal, but one for another day. All right, that's it for Street Science. I'm Giovanna Versace.
I'm Juliana Tattlebaum. Worldwide Exchange up next.
Power outages can be unpredictable, inconvenient, and disruptive to your life, posing a real threat to your comfort and safety. When the power goes out, you have no lights, no refrigeration, no heating or air conditioning. Your well or sump pump won't work. Your modern daily electronics are rendered useless. And what if the power's out for days or weeks? Are you prepared? You can be with a Generac home standby generator.
24 days we were without power. I had water, I had ice, I had coffee, I had air conditioner. I was able to stay here because of Generac.
When an outage occurs, your Generac home standby generator automatically powers up, so your life goes on without disruption. You and your family are comfortable, safe, and secure. Generac generators run on your home's existing natural gas or propane. And Generac's standard Mobile Link remote monitoring system keeps you posted on operating status, maintenance updates, and more. Generac generators are designed, engineered, and purpose-built in the USA. Generac is the #1 manufacturer of home standby generators in the world. 8 out of 10 home generators are Generac, with thousands of satisfied customers.
Very good product. Very, very good reviews from everybody.
Prices start at just $19.99, and special financing is available with surprisingly affordable monthly payments. Call now to schedule your free in-home assessment with one of Generac's 6,000 nationwide dealers. The call is free, the assessment is free, and there's no obligation to buy. Plus, if you act now, you'll receive a 7-year extended warranty absolutely free. That's a $695 value. Call now, so the next time there's a power outage, your home powers up. Power your life with Generac. Call or go online to schedule your free in-home assessment today.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
Life Room by Four Seasons, where outdoor living meets future technology. No matter your style or budget, Four Seasons has got you covered. Simple shade from the sun? Covered. Outdoor dining in style? Covered. Need additional living space? Oh yeah, that too. Call today and arrange your free design consultation. Four Seasons, we've got you covered.
The biggest problem that we're helping address is access to care. Doctor on Demand is available nights, weekends, holidays, on a mobile phone or on the website. So much of the value that telemedicine can bring is empowering patients to seek care when they need it. The opportunity for our overall healthcare system is to deliver all the healthcare virtually that can be delivered virtually. That'll reduce costs, increase quality, and drive satisfaction for the doctors and the patients. This is the future of business. I watch CNBC.
It is 5 a.m. at CNBC Global Headquarters, and here is your 5 at 5. Mixed messages. Policymakers the world over sending investors on a very wild ride. Now this, as Wall Street is coming off its best day in more than a decade, but can that rally hold? One winner is buying Apple, surging nearly 10%, but supply chain troubles still remain there. And the event exodus continues as Google, Facebook, and more say they're standing down from key events amid the coronavirus outbreak fears. Plus, more trouble for Uber, admitting for the first time of its risks to business over the coronavirus. It is Tuesday, March 3rd, 2020, and Worldwide Exchange begins right now. Good morning and welcome to the show. I'm Dominic Chu in for Brian Sullivan today. With me for the entire hour, Aureus Asset Management CEO and CNBC contributor Carrie Firestone. Well, kicking off this Tuesday morning with mixed messages sending global markets on a very wild ride. The Dow is coming off its biggest point gain in history, snapping a 7-session losing streak on hopes of action from central bankers around the world. Again, amid the coronavirus outbreak. Comments from the Bank of Japan, the European Central Bank, the International Monetary Fund, and more, giving investors a reason to buy that historic sell-off that we saw over the past week and a half. One stock hit hardest in that selling was up very big yesterday. Apple shares surging after an upgrade and seeing its best one-day gain since 2008. Those shares again up in the pre-market right now by 1%, 301.30 the last trade there. And this morning, stock futures are in the green in a very volatile trade. If things stand the way they are, the Dow would open up by just around 100 points, the Nasdaq up by about 26 points, and about 10-point gains for the S&P 500 overall. At one point, we had indicated down more than 200 points earlier on in the session. Now, several factors you can see here down that level. Several factors are at play. Australia's central bank cutting its key benchmark interest rate by 25 basis points to a record low of just 0.5%. Number two, early reporting from our Steve Leisman that Fed Chairman Jay Powell and Treasury Secretary Steven Mnuchin will be, quote, coordinating a conference call to help orchestrate a global economic response to the coronavirus outbreak. Both good news for investors initially, but it's number three that's giving some pause right now, as Reuters reports a draft statement from the G7 over a response to the coronavirus makes no direct calls for additional fiscal or monetary support amid that coronavirus outbreak. And then earlier this morning, President Trump weighing in on the crisis and the Fed, tweeting, of course, quote, Australia's central bank cut interest rates and stated it will most likely further ease in order to make up for China's coronavirus situation and slowdown. They reduced to 0.5%, a record low. Other countries are doing the same thing, if not more so. Our Federal Reserve has us paying higher rates than many others. We should be paying less. Tough on our exporters and puts the USA at a competitive disadvantage. Must be the other way around. Should ease and cut rate big. Jerome Powell, led Federal Reserve, has called it wrong from sad, day one, sad. That was a lot of stuff coming from President Trump about the central bank here in the United States. Reaction from Asia and Europe so far has been interesting. Juliana Tattlebaum is standing by in London with the latest. And Juliana, we are seeing a lot of green on European market screens.
Indeed, that investor optimism that you guys saw on Wall Street yesterday has filtered through to the European session. Very strong gains across the board here. Let me take you through the country moves. The FTSE MIB over in Italy is trading 2.75% higher. Italy was the key underperformer yesterday. Italy, of course, the key country when it comes to coronavirus here in Europe, facing the biggest outbreak outside of Asia, certainly within Europe. But even that index is trading very strongly this morning. The German index, the DAX, up 2.9%. So very strong gains here across the different regions, with investors very closely eyeing that teleconference due later today. And no doubt optimism around moves from central banks and governments on the fiscal front are providing some support for investors this morning. Let's take a look at the sectors. We've got green across the board here when it comes to the different sector moves. The best performing sectors, though, very interesting. Travel and leisure up nearly 3.7%. And that, of course, houses the airline sector, which has borne the brunt of the sell-off that we've seen in the last couple of weeks. Basic Resources leading the way, 3.8% higher. Of course, that is the most cyclical trade China-exposed part of the European market. We're seeing a very strong bounce there. On the downside, we've got the more defensive parts of the market where investors tend to go for safety, telecoms, food and bev, media, and utilities. But even those defensive sectors are trading north of 2% this morning. So very positive session here in Europe. Dom?
All right, thank you very much, Juliana Teitelbaum, live in London with the European bourses. Now to the coronavirus outbreak, where China is reporting its lowest number of new coronavirus cases in more than a month, while infections around the world continue to rise. Rahel Solomon is here with all those details. Good morning, Rahel.
Hi, Dom. So China recorded 125 confirmed infections and 31 deaths in the previous 24 hours. That is the lowest number of officially confirmed infections since January 20th. But clusters outside of China continue to show troubling signs. In South Korea, for example, the site of the world's second largest outbreak, the number rose to more than 4,800. That's nearly double what we saw on Friday. Back home, the coronavirus has killed 3 more residents at a nursing care facility near Seattle, now bringing the total U.S. death toll to 6. Meantime, Foxconn says that it expects its China-based operations to return to normal by the end of this month. The company says it cannot estimate how the outbreak will influence its full-year financial performance, although we do know last month it did warn of a negative impact. And more tech companies abandoning plans for major conferences in the coming weeks over these outbreak fears. Google announcing that its Cloud Next 2020 event that was scheduled for April, well, now they're saying it's only going to be held virtually out of an abundance of caution for the health and safety. Facebook, meanwhile, said that it had decided not to participate in South by Southwest this month. And Adobe has said that it made the decision to cancel the live portion of its annual Adobe Summit that was scheduled to take place in Las Vegas from March 29th through April 2nd. Dom, I'll send it back to you.
All right, thank you very much, Rahel Solomon, for the latest details on the coronavirus. Back to the markets. Stocks searching for some direction after that massive rally yesterday. With me for the entire hour is Carrie Firestone. And Carrie, I have to say, it was huge. The biggest point and percentage moves since 2009, the biggest point gain ever on record for the Dow, was yesterday the bottom.
Well, we're going to find out. It definitely was the bottom for this little bit of the cycle. And we had such an oversold position. If you think about what happened last week, at one point we were down about 16% from the peak. And the peak was just February 19th. Hard to believe it was just a few days ago. And it came down with such ferocity that we really had a level that was undeniably oversold.
So Carrie, we're just showing viewers right now and listeners on Sirius XM channel 112. What we're showing right now is just how massive the Dow's big swings were. Down over 1,000, down nearly 900, down 100, down nearly 1,200, down nearly 400, then up almost 1,300. I mean, is this indicative of a market that is healthy at this stage?
So we have to separate a couple of things. One is that there was a lot of program trading. I believe that at the end of a few of those days when there was a collapse and you just watched the screen and it was just cycling down at this tremendous pace, that was because of program trades that were put on. And it's also possible that yesterday, the second half of the day, we had also an enormous rush from big black boxes that put in buy orders. Does this mean that we can sustain this? It looks like we're going to sustain it today. If the market was selling at a level on February 19th that was a bit overbought, naturally, I think there was reason to expect it to come down, coronavirus or not. I mean, there was a lot of optimism in the market. At the end of Friday, huge pessimism. So sentiment over the weekend swung a little bit, and we had to see some recovery.
What I'm curious about is, I mean, there's no doubt we're in let's call it roughly a decade-long run for the stock market at this point now. It's been such a long time, probably since the fourth quarter of 2018, where you saw any kind of real downside volatility in the markets. What was it exactly you think that drove all of those massive losses that we saw earlier on this past week and a half or so?
So there were a few things, a bit of a perfect storm. We had, for a few weeks, the market ignore the signs of coronavirus. The market kept going higher. People say, well, gosh, doesn't the market worry about Bernie Sanders gaining power? Doesn't the market worry about weakness in China, which is 16% of global GDP? Why isn't the market worried about that? Why isn't the market worried about the coronavirus? Market didn't worry, kept going higher. And then all of a sudden, it woke up and said, oh, gosh, there are going to be cases in the United States. This is going to affect things.
All right, Carrie Firestone, you're going to stick around for the entire hour. We've got a lot to break down, of course, with all the market action this past week. Stick around here. When we come back on the show, bouncing off the bottom, we are tracking crude oil's next move as it surges from multi-year lows, plus how a trading app favored by millennials and younger investors left millions on the sidelines out in the cold in yesterday's massive rally. And then later on, Massa's mea culpa, what the SoftBank CEO is telling investors after recent investment debacles. A very busy hour still ahead when Worldwide Exchange returns right after this.
In India, I learned that you don't add masala just to the food. You add it to everything you do. I learned that flavor is more than a taste. It's a sight. It's a sound. It's a science. In India, I found the secret masala spices that make all the difference. The joy with which you cook. The love with which you serve.
Next on Squawk Box, coronavirus fears, market volatility, dilemmas for investors. Should you buy, sell, or sit tight? Some strategies to get you through the turmoil. Squawk Box today, 6 a.m. Eastern. Watch or listen live on the CNBC app.
Wondering which credit card is right for you? Introducing CNBC Select, the authority on all things credit cards. We do the research, you reap the rewards. Head on over to cnbc.com/select and take control of your money.
Does hair loss run in your family? Are you losing your hair?
You can now treat hair loss at home in just 6 minutes a day with a laser light therapy that's been clinically proven to treat hair loss and regrow thicker, healthier hair. It's called the Capillus Laser Cap.
Laser therapy is an FDA-cleared treatment for hair loss. What laser therapy does, it reboots that blood supply. It reestablishes blood flow, oxygenation. It's a very effective treatment for hair loss.
Using the cap is very simple. I sit pretty much right here, watch TV, and I have it on. It's completely comfortable. You forget you have it on.
I just put it on when I watch the TV, and I got my hair back.
I feel like it truly has changed the way I see myself.
If you notice it, do something about it. Don't wait, because the longer you wait, the worse it can get.
Get the results you want or get your money back. Payment plans are available.
Call 1-888-474-0056 today or go to trycapillus.com.
All right, welcome back to Worldwide Exchange. We want to keep you up to speed on some breaking news. Severe weather in parts of Tennessee overnight, leaving a trail of destruction in the Nashville area. The National Weather Service saying radar indicated a possible tornado over the northern part of that city. A number of counties remain under a tornado warning right now. So far, police say at least 2 people have died. This is a developing story. We will update you as we hear more on our side. But again, a devastating tornado possibly ripping through Nashville, Tennessee just last night. Well, oil prices are extending gains today on continued hopes that central banks will take coordinated action to offset the impact of the coronavirus and what it's having on global demand. There's also growing optimism OPEC and its partner countries will also again, take a look at that group known as OPEC Plus, in essence, will announce deeper output cuts at their meeting later on this week. I guess before we get to the guest here, Carrie, the energy market has been very much a focus for a lot of investors. They say that those cyclical type commodities, economically sensitive, are the ones that might be the better indicator about whether or not the global economy is slowing down. How closely have you been watching what's been happening with the oil markets with regard to what's with coronavirus?
Sure, exactly. It's very important. And if you've watched the price of oil, WTI, for example, we track all the time, it's down 27% since January. That is a tremendous decline. It cuts out, or should, a lot of production here at the $46 level. So if we see a resumption in price, if prices start to come up, if OPEC does cut, that would be excellent for the energy industry. And I think that will show an underlying strength. We have seen such a debacle in that whole industry between too much supply, not enough demand, alternative energy, and then sentiment against the fossil fuel industry that they need something that's going to boost this sector.
I mean, there's also an interesting kind of market dynamic right now, right? I'm just looking at AAA. They track average gasoline prices here in the United States. Currently, we're talking for regular unleaded, $2.42 a gallon.
Wow.
A month ago, it was $2.47. So we have seen near medium-ish term gasoline prices start to fall. Right. But that might be because of a reason, right? Because maybe people are driving less. They don't want to go out as much anymore. But oftentimes, can you look at it as a self-correcting mechanism? Lower gas prices might involve me wanting to pay lower gas prices to go out and drive more or spend more.
Well, you can hope so. The industry certainly hopes so. And going into the warmer months, assuming that people want to travel
for the summer, sure,
and not fly, for example. If people fear flying, they will drive more, which will be good for consumption, good for the sector, and perhaps it will ultimately good for profits in the stocks, which have been abysmal, as we all know.
Those airline stocks are just absolutely getting crushed in this stage right now. So. Yeah. All right, Carrie, let's keep you around here. Let's bring in also Amrita Sen, Chief Oil Analyst at Energy Aspects. Carrie Firestone of Aureus Asset Management is still with us as well. And Amrita, we were just having a discussion about some of the demand and supply aspects of what's happening in the oil markets right now. Does OPEC need this coronavirus situation resolved, and what is it willing to do about it?
Well, of course, they would like the situation resolved, given the kind of demand impact we are looking at. We think Q1 global oil demand is going to be down year on year by 1.2 million barrels per day. That's the steepest decline since 2008-2009 crisis. They are very, very aware of the need for action. I think the numbers being talked about are deeper cuts, of course, for Q2, potentially even longer, 600,000 barrels per day or even up to million. Those are the numbers being talked about. We do think they will deliver a big cut. But I think the one or the most important thing for us is to realize that OPEC and Saudi Arabia in particular realize that, look, this isn't about delivering a short-term upside to prices, even if they cut a big number. This is about maintaining inventories at a more or less reasonable level through the second quarter so that once demand does pick up in the third quarter, prices can rally. So this is very much about guaranteeing that future upside in oil prices rather than delivering a short-term quick upside to oil prices.
Amrita, I'm curious, with China coming back online, how much demand would you expect over the coming months to add per day from China?
I mean, some of the numbers being talked about in China, that demand fell by 50%. We don't think it was that steep when you take everything into account. But in terms of normalization, we think right now Chinese demand is about 60% of, say, what it was this time last year. April, we have 80% normalization. And then by May, again, assuming there is not another outbreak, things go back to normalcy. So pretty much on a month-on-month basis, you're talking about 1 million barrels per day month-on-month increase, and then a 2 million barrels per day by April into May.
All right, Amrita, we've just got about a minute left here. Let's talk about how the U.S. shale producers are being impacted by those lower oil prices. Is there an impact right now? Is there more stress on U.S. producers because of the steep slide that we've seen in U.S.-based oil prices?
Oh, absolutely. And we've put out a note recently kind of highlighting this, that there's a lot of downside risk to our production numbers, which are about 600,000 barrels per day of crude production growth from the U.S. But the biggest issue right now is they are far more exposed to the downside in prices, given how weak gas prices are, natural gas prices and NGLs prices. They're really struggling. The credit market is completely closed, and just general lending has been very, very tight. And you will see more bankruptcies in the shale patch. You've already started to see some companies leave certain acreages. There are downgrades coming through on production profile, particularly for 2021. That's what you need to watch. We could actually get U.S. production down year on year for the first time. That would be in over a decade. So I think that's the one to watch out for.
All right, U.S. shale, certainly a big focus as oil prices continue to slide. I'm Rita Sen at Energy Aspects. Thank you very much for those thoughts. And of course, Carrie, thank you very much for sticking around. Oh, still on deck for the show, forget Philadelphia. Why Twitter may be the new hotspot for brotherly love. Just ask Jack Dorsey and Elon Musk about their recent tweet exchange.
Today's big number, 4,953. That's how many points the Dow traveled in the past 5 trading days. With yesterday's gain, the Dow, S&P, and NASDAQ all exited correction territory.
The question wasn't really, how does Royal Caribbean become digital? But the better question was, how do we give customers back time in their vacation?
Royal Caribbean set a 5-year roadmap that included us first identifying, setting up a digital organization. One of those things is the need to transform the guest experience. EY helped us look at the view of digital from every different angle. We're going to be able to make that experience even better than it is today.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen, healthier brain, better life.
Don't waste your time and money at the chain store. They got the best auto parts, brake parts, suspension parts, and dealer parts too. The website's so easy to use. The lowest prices and fast delivery too. All the parts your car will ever need. All the savvy folks are buying parts at rockauto.com. All the parts your car will ever need. rockauto.com.
The world's newest ocean cruise line is yet again a world's best. Viking's elegant ships deliver a superb, inclusive experience. With enriching shore excursions, alternative dining, all veranda staterooms, Wi-Fi, and much more. We're very proud to have been named a world's best 4 years in a row by Travel + Leisure readers. Learn more at vikingcruises.com.
When fingertips, knuckles, and cuticles get cracked, you need relief that gets right to the point. Gold Bond Cracked Skin Relief, designed to precisely fill cracks, instantly soothe. 94% saw noticeable improvement. Gold Bond Cracked Skin Relief.
Imagine traveling hassle-free with your golf clubs. Now you can with ShipSticks.com. No more lugging your clubs through the airport at risk having your clubs lost or damaged by the airlines. Sending your own clubs ahead with ShipSticks.com makes it fast and easy to get to your golf destination. With just a few clicks or a phone call, we'll pick up and deliver your clubs on time, guaranteed, for as low as $39.99. ShipSticks.com saves you time and money. Make it simple. Make it ShipSticks.
Welcome back to Worldwide Exchange. Let's get a check of some of the big stocks on the move so far today. Tilray is falling after the marijuana producer reported a bigger than expected fourth quarter loss. Results were hurt by an impairment charge related to its assets and higher costs as oversupply and other issues weigh on the Canadian pot maker. Those shares, by the way, down 9% in the pre-market. Logitech is cutting its operating profit guidance for the year. The computer software and hardware company known for its wireless headsets and mice, those mouses on your keyboards and everything else, citing supply chain uncertainties due to the coronavirus. But the company is encouraged by continued strong demand for its products. Those shares of Logitech up 3% in European trading. And Hyatt is pulling its full-year earnings outlook as the spread of the coronavirus impacts travel. The hotel operator says revenue per available room in Greater China has been affected due to business travel restrictions in North America and Europe as well. We'll keep an eye on all of those travel and leisure-related stocks. As we head out to break, take a look at the top Dow gainers in yesterday's historic one-day rally. Apple up 9%. Walmart more than 7%. United Health 7%. Microsoft higher by 6.5%. Some massive moves higher for big Dow components. Much more Worldwide Exchange right after this.
Whether you've enjoyed the legendary terrain in Telluride, the unparalleled landscape of Park City, or the famed peaks of Whistler, you face the hassle of lugging your gear through the airport. With ShipSkis, you're just a few clicks away from having your skis, snowboard, and luggage shipped from your doorstep to your destination. With unrivaled pricing, real-time tracking, ShipSkis delivers hassle-free. Ship ahead and go catch those first tracks on fresh snow. ShipSkis, your skis delivered.
Yes, I'm stuck in the middle with you.
No one likes to feel stuck, boxed in, or held back, especially by something like your cloud. It's a problem, but the IBM Cloud is different. It's the most open and secure public cloud for business. It can manage all your apps and data anywhere, so it can help take on anything, from rebooking flights on the fly to restocking shelves on demand, without getting in your way.
Could it be a day of snapback or sell-off for investors? What early trading signals reveal for the best moves for your money? Squawk on the Street, 9 a.m. Eastern today. Watch or listen live on the CNBC app.
I like to buy hysteria, not sell it. I like to buy panic, not sell it. We are trying to make sense of things for you here tonight in the face of this incredibly difficult but panicky tape. Watch or listen live on the CNBC app.
Do you worry about going to the dentist? After all, a visit to the dentist can easily cost $2,000 or more. Well, relax. The Carefree Dental Card is now available in your area. Call now and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. Activate your card and you can start using it immediately. From exams and cleanings to more expensive procedures like crowns, dentures, even braces, they're all included with the Carefree Dental Card. Say you go to the dentist today without any card and your bill is, well, ouch. Wait a minute, let's try that again. You go to the dentist today and show your Carefree Dental Card, you save $525. The Carefree Dental Card is just $15.95 a month, so call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit. Call 1-800-478-0809 now.
All right, welcome back to Worldwide Exchange. Take a look at the Dow so far year to date, because from record highs that we saw just about a month or so ago down to the intraday lows in the Dow, we traveled almost that range, 4,900 points. Now, with yesterday's big surge higher here, we have now recovered about 40% of those losses that we've seen for the Dow from record highs. So we'll see if those bulls can continue that momentum. For right now, they are at least indicated positive for the pre-market. More Worldwide Exchange coming up after this. Keep it right here.
The question wasn't really, how does Royal Caribbean become digital? But the better question was, how do we give customers back time in their vacation?
Royal Caribbean set a 5-year roadmap that included us first identifying, setting up a digital organization. One of those things was the need to transform the guest experience. EY helped us look at the view of digital from every different angle. We're going to be able to make that experience even better than it is today.
I believe a company should focus on what they do best. At Tecovas, that's handcrafted, high-quality Western boots at a fair price. Because NetSuite shows me all my financials in one place, we stay focused on what we do best.
With NetSuite by Oracle, you get a full picture of your business. Finance, inventory, HR, customers, and more. It's everything you need to grow, all in one place. NetSuite is the world's #1 cloud business system. Schedule your free product tour right now at netsuite.com/boots.
Sleep this amazing? That's a ZQuil Pure Z Sleep. Our liquid has a unique botanical blend, while an optimal melatonin level means no next day grogginess. ZQuil Pure Z's, naturally superior sleep.
Now, there's real power in travel. It's a two-sided thing. First is what it does to yourself, because it does give you experiences of other cultures and other people. But also, it lets other people experience you. And I think it helps make us kinder.
Viking, exploring the world in comfort.
Is there a low ceiling on your career? Then get the Certified Management Accountant credential and raise it. The CMA certification. You've got to earn it.
This, allergy sufferers, is my favorite Zysol bedtime story. It's about the time when allergy symptoms ruined people's sleep and made them miserable all the next day. Oh, what relief they found taking Zysol at night. It worked while they slept and they woke refreshed for more productive days ahead. Zysol provides powerful relief. Plus, it lasts up to 6 times longer than Benadryl, works faster than Claritin, and on first dose provides the same relief as Zyrtec in a pill nearly half the size. So, be wise all, take Zysol. At night.
Here we go again. Futures swinging wildly overnight after the Dow posted its biggest one-day point gain ever. The big question, will global central banks take action to stem the coronavirus economic slide? A roundup of all the messages investors need to know straight ahead. Plus, left out in the cold, how a trading platform outage shut millions of millennials out of the market. It's Tuesday, March 3rd, and the second half of Worldwide Exchange begins right now. Welcome back. I'm Dominic Chu in for Brian Sullivan this morning, kicking off this half hour with mixed messages, sending global markets on a very wild ride. The Dow is coming off its biggest point gain in history, snapping a 7-session losing streak on hopes of action from central banks around the world amid the coronavirus outbreak. As you can see here, a massive surge in stocks yesterday. Comments from the Bank of Japan, the European Central Bank, the IMF, and more, giving investors a reason to buy that historic sell-off that we've recently seen. One stock hit the hardest in the selling, was up big yesterday. We're talking about Apple, surging after an upgrade and seeing its best one-day gain since 2008. By the way, Apple shares up another nearly 1% in the pre-market trade there, $301.35 for Apple stock, the last trade in the pre-market. Morning stock futures right now in a very volatile trade are actually indicating a higher open just by about 75 points. That's off the best levels of the session. But if these futures gains hold into the opening bell, the S&P would open up by 7 points as well. Now, the Dow Jones futures, as you can see here, were very low at one point, and we've climbed higher, again, just off the highs of the session for the Dow futures, indicating another green day, at least for now. Several factors are at play. Number one, the Reserve Bank of Australia is cutting its key interest rate by 25 basis points to a record low of just 0.5%. Number two, there is now early reporting from our Steve Leisman that Fed Chairman Jay Powell and Treasury Secretary Steven Mnuchin will be, quote, coordinating a conference call to help orchestrate a global economic response to the coronavirus outbreak. Both good news for investors initially, but it's here, number three, that's giving a bit of pause. As Reuters reports, a draft statement from the G7 over a response to the coronavirus makes no direct calls for additional fiscal or monetary support amid that coronavirus outbreak. And then earlier this morning, President Trump weighing in on the crisis and the Fed on Twitter, of course, saying, quote, Australia's central bank cut interest rates and stated it will most likely further ease in order to make up for China's coronavirus situation and slowdown. Our Federal Reserve has us paying higher rates than many others when we should be paying less. Tough on our exporters and puts the USA at a competitive disadvantage. Must be the other way around. Should ease and cut rate big. Jerome Powell-led Federal Reserve has called it wrong from day one. Sad. Now, to the global markets. We have complete team coverage as only CNBC can give you. Juliana Tattlebaum is live in London following the early action in European trading. But let's start with Matt Taylor and how Asia performed overnight. And generally speaking, we are very much in a situation where green is on the screens.
Absolutely, Dom, and I'm going to kick it off with what you were talking about with the Reserve Bank of Australia cutting the cash rate there by 25 basis points to that new record low of just 0.5%. The Australian market ending higher by the close of trade, but we were well off the highs of the session. We're up by more than 1% at one point in time, and we even had the Australian dollar making gains as well, because there had been some talk that we could see a surprise 50 basis point cut from the RBA, but of course we didn't see that. The central bank saying the coronavirus has clouded the short-term outlook in Australia, particularly having an impact on various parts of the economy like tourism and also the education sector, because a lot of Chinese students studying in Australia. It also says once the virus is contained, the Australian economy will return to an improving trend, but it does stand ready to act tomorrow. We're going to be getting Q4 growth numbers out of Australia. Elsewhere, Malaysia's central bank just this afternoon here in Asia as well, also cutting rates by 25 basis points, taking that rate down to 2.5% or around a 10-year low. Let's give you a look at the Asian markets. Australia, New Zealand was the outperformer today, up by about 2.2%. We did see the China markets making some gains. Shanghai up by about 0.75%. Hong Kong just closing pretty much on the flat line, but a lot of money going back into the safety or the perceived safety of the Japanese yen, trading around that 107 level, and that really hit the Japanese market. It was up sharply at one point, but closed the session down by about 1.2%, or some 261 points. Dom, back to you.
All right, Matthew Taylor, live in Singapore with the latest there on the Asian trade. Thank you very much. Now to Juliana Tattlebaum, who is in London tracking the early action in Europe. Juliana.
Well, Dom, despite the mixed messaging that you highlighted there with regard to what we can expect in terms of a global economic response, European markets are marching higher this morning. Green across every major region, including Italy. The FTSE MIB is up 2.5%. Yesterday, the Italian market lagged broader Europe as investors focus on the economic fallout from the outbreak taking place in Italy, the worst outbreak in Europe. The German index, the DAX, up 2.7%. So Europe's largest economy also charging ahead. But put this into context, we are still well off the highs seen last week. So yes, European markets are pushing higher this morning, but we are still lower than where we were at the beginning of this outbreak. Let's take a look at the sectors. The interesting performance taking place in terms of sectors this morning. Those more cyclical parts of the market are performing better. Basic resources up 3.7%. Travel and leisure also getting a step higher this morning, 3.3%. So very much a positive session coming together here in Europe. Dom?
Live in London with the latest there. Thank you very much. As for the U.S. markets, they continued their wild moves from last week. The major averages coming off their worst weekly skids since the great financial crisis back in 2008, with the Dow posting two separate losses of more than 1,000 points apiece as fears of the spreading virus outbreak rattled investors. But stocks bounced back in a very big way yesterday as all three indices closed out of so-called correction territory. The Dow soaring nearly 1,300 points, its best one-day point gain ever, and the best percentage gain since 2009. Joining me now is Esti Dweck, head of global market strategy at Natixis Investment Managers Solutions. Carrie Firestone of Aureus Asset Management and a CNBC contributor is still with us for the entire hour. Thank you, folks, very much for being here. Esti, we will start with you. Let's talk about what exactly drove yesterday's trading action and what made it possibly one that you could have legs or have more endurance with over the medium term.
Well, it started over the weekend, central bank after central bank coming out and saying they were ready to step in as needed. I don't think it was a surprise, but at some point the sentiment or investor sentiment needed to hear this reassuring message. You had the G7, which looks to be maybe disappointing a bit in terms of what kind of message they're sending, but they were coming together. And at some point, markets thinking, okay, we're going to have a coordinated response. We're going to have a lot of support, whether it's fiscal and monetary, wherever it's possible, and maybe even more than what was possibly expected. And that's what you see in markets. You also eventually had to snap that very long and very violent losing streak. Now, it doesn't mean it's all clear. We'll see how it goes. It wouldn't be a surprise to have a couple days up and then to have a few more concerns come back. You still are going to have questions on growth. as this outbreak spreads through Europe and the US, and we're still trying to assess the economic impact. But having that backstop, having the central banks and the major governments as this support will always be helpful.
All right, so Carrie, it's interesting what Esty brings up here, because she's saying that there may not be yet a bottom in place. However, that hasn't stopped asset managers like yourself from putting money to work. So were you, in the course of the past few days, buying on that weakness? And if so, where are you putting money to work?
Yeah, exactly. Well, we looked at Friday, where the market had that sharp decline and then ended the day in a much better position, less than 1% down, as bargain basement opportunity. And so we put together a list of what we thought might recover quickly and was very cheap, including Facebook, Amazon, PayPal, Salesforce, names that had been strong names for us over the past couple of years. We own them. We added to those positions. They were all down sharply. And we imagine that this economy will recover. This virus
Carrie,
is going to.
Was it just technology though? Because all of those things, I think payment technology like PayPal, I think large cap, mega cap social media like Facebook. These are names that have been darlings for a while. Was it only tech and comm services that was on your shopping list? Was there anything else out there that you thought was attractive?
Yes, we also bought some Baba, which is similar, but it's a Chinese company. We bought some PSX, which is Phillips 66, an energy refiner. We bought Remax, which is a real estate company. It's a real estate agency. And we bought one biotech stock. We bought a few names. Evolus is the name that we thought were extremely attractively priced, that the market would start to come back to at the multiple that the market was trading at on Friday, which was about 16 times next year's earnings. And that's very, very low growth earnings. Nothing this year, some next year. We thought this is an opportunity, such as December of 2018, where the market crashed.
So, Esty, Carrie brings up a great point about this. There have been calls about the valuation of the markets for quite some time now. They are overvalued. The markets can't keep going higher. They are statistically overbought. So on this kind of a pullback, is it more attractive to you? And if so, what types of companies and industries go on your shopping list, Esty?
Absolutely. Valuations were high. We thought that they could continue to go higher, especially as earnings growth for this year was supposed to be a bit better. And we probably will get back to something like that. I completely agree. I don't think we're going to see a recession in the U.S. We're pretty constructive about the medium term. So valuations are much more attractive today. There's a lot of areas, including technology, that are going to be appealing. I think some other sectors might take a bit longer, such as energy, where you're really going to have a bit more confidence in global growth that needs to come back before those are working. But in general, we also tend to look a lot geographically, and we still favor the U.S. Europe should benefit at some point, but it is more exposed to Chinese growth, and you could see more of an impact there on earnings and on growth for the old continent. So a bit of preference is there, but definitely more positive to go back in, and maybe one of the reasons why we had a better performance yesterday as well.
So, Esty, before we let you go here, how much of the market moves these days in this environment are going to be predicated on financial ministers and central bankers getting some kind of a coordinated response together? Is that necessary for the markets to become more constructive over the near to medium term?
I think markets needed to hear you had that backstop, you had that floor, and most of what the central bankers were trying to do was to bring back some stability to the markets. If you think about it, cutting rates is not going to make, at least in the next couple of weeks, that big of an impact on the economy, given what is concerning markets, but it does really help investor sentiment. And at some point, you're going to have investors who think, oh, these valuations are better, the levels are more attractive, how long do I want to stay out of this? Am I worried I'm going to miss out when this bounces? And that's the question already after yesterday. So you needed to hear it and to maybe put a stop to the skid, but it'll probably take a little bit more to have a more sustainable move upwards.
All right, Carrie, the last word to you here. How important is the coordinated response? Is it necessary from central bankers to make this thing last?
It's a good thing to have. Remember, it's the coronavirus that was worrying investors in the market. So if the coronavirus appears to be receding in China, the lowest number of cases today we've had in a long time, that's what the market is going to want to hear today.
All right. Esty Dweck over at Natixis, thank you very much for that. Also, Carrie, you're sticking around as well. Great conversation here. Of course, much more we can go into. We'll have to have you back. Well, coming up on the show, stocks feeling the impact of the coronavirus, the names that you need to know today, those are coming up next. But first, as we head out to break, check out this morning's biggest S&P 500 winners in the pre-market. You can see, no shock, United Airlines, Delta Airlines, American Airlines, the hard-hit travel stocks up anywhere from 4.5% to 6.5% right now. Stay tuned. You are watching Worldwide Exchange on CNBC.
Your skin has different needs at night. That's why there's Gold Bond Overnight Lotion. Works while you sleep, penetrating 10 layers deep as hyaluronic acid locks in moisture. Wake up to rejuvenated-looking skin. Gold Bond Overnight Lotion.
I'm 52, but in my mind, I'm still 25. That's why I take Osteo-Biflex to keep me moving the way I was made to. It nourishes and strengthens my joints for the long term.
Osteo-Biflex, now in triple strength plus magnesium.
We have like 40 years of data. That's incredibly valuable.
I don't know.
When do we introduce Sriracha?
Not soon enough.
Exactly. These are our sales, by product, by region, set against evolving demographics. You can actually see taste trends.
Since when can we do that?
Since we started working with BDO.
People who know BDO. The world is built for you. So why isn't it all about you when it comes to your money?
So, what's on your mind?
We are a 97-year-old firm built for right now. Edward Jones. It's time for investing to feel individual.
What I love most about being a scientist at 3M is that I'm part of a community of problem solvers. We make ideas grow from an everyday solution to one that can take on a bigger challenge. We are solving problems that improve lives.
Welcome back to Worldwide Exchange. Now to the latest on the coronavirus outbreak. Rahel Solomon joins us with those details.
Hi, Don.
Rahel.
Yes, so some of the tech giants are starting to see product shortages as the virus spreads. Reports say that this includes Apple iPads and AirPods, Facebook VR headsets, and HP desktop computers. Also, the world's airlines continue to face the impact of falling demand. In the latest headline, Dubai's Emirates airline is apparently now offering staff unpaid leave. And back here in the U.S., President Trump will visit the National Institutes of Health and Bethesda, Maryland today to talk about fighting the coronavirus. Here's what he said yesterday while meeting with big pharma executives.
I don't think you'll need that because I really think we're in, extremely good shape. We're prepared for anything, and we could always do that at a later date if we need it, but I don't think we need that.
All right, Dom, you're up to date. I'll send it back to you.
All right, thank you very much, Rahel Solomon. Let's get a check on some of these stocks feeling the impact of the coronavirus. Visa warns second quarter revenue growth will be slower than expected due to the coronavirus. The company says the outbreak has limited travel to and from Asia and driven a sharp slowdown in its cross-border business, a key source of revenue for the world's largest payments processing network. Visa shares up about 1% pre-market. Microchip Technology expects flat revenue growth this year and is pulling its earnings guidance, citing the coronavirus. The company is seeing very weak demand in Asia, especially in China, and customers are returning to work at a slower pace than anticipated. Microchip shares about 0.5% down pre-market. And Uber is acknowledging the coronavirus poses a material risk to its business. In the company's annual filing, it warns users could decline due to many factors, including a pandemic or fear of such an event. Uber monitoring coronavirus 5 times in the filing, mentions it 5 times in the filing, saying it could disrupt operations outside the U.S. as well. Those Uber shares up about 1.5% in the pre-market trade. Now to Washington, D.C., where the crisis response remains in high gear ahead of a busy week for coronavirus point person, Vice President Mike Pence. Our Ilan Moy joins us now from Washington with the latest there. And Ilan, this is very much about the U.S. and how it can deal with this. Are lawmakers and politicians ready for what could happen next?
Well, Don, Vice President Mike Pence is going to be heading to Capitol Hill today as lawmakers get closer to a deal that would provide billions of dollars to respond to the coronavirus. I am told that the range for this emergency spending package is between $7 to $8 billion, and a source tells me that bill is likely to be unveiled today. Now, both Republicans and Democrats are working on this package. House Speaker Nancy Pelosi said she expects to vote on it this week, and the Senate would follow shortly afterward.
I'm glad that our prospects for supplemental appropriations rest in the hands of a bipartisan group of negotiators. I would encourage my Democratic colleagues in both houses to let them do their work. It will be important to pass this first benchmark and supply these important funds within the next 2 weeks.
Still, Democrats are laying out 4 key principles in this bill. First, that none of the money for the coronavirus could be transferred to any other account to pay for other projects, such as the border wall. It also needs to ensure that any eventual vaccines are affordable. Small businesses that have been hurt by the virus should get interest-free loans, and the bill should include aid for state and local governments. Now, right now, there don't appear to be many objections to those parameters, and both parties do agree that the administration's initial proposal of a $2.5 billion package, Dom, that's not going to be even close to enough. Back to you.
All right, so Ilan, let's talk a little bit about the possible logistics within the government and within Congress right now of getting this done. How quickly is it from a perception standpoint? How quickly does it need to be done for constituents across the country to feel as though Congress is actually taking the appropriate steps and working with the president to get something tangible in place for a coronavirus threat if it were to really materialize in the U.S.?
Well, this aid package appears to be on the fast track, Dom. So if this bill is indeed released today, we're hearing that the House could vote on it potentially as soon as tomorrow. And that would require sort of waiving the traditional rules of the House that require a bill to sit for 72 hours before it can come up to a vote. There's even some talk that the Senate might not even wait till next week. Some say the Senate could even vote this week on this package and just get it out the door. So there is pressure on lawmakers. They understand that their constituents want to see them working together on this and not playing politics with something as deadly as the outbreak.
All right, Ilan Moy live in Washington with the latest details on its response to the coronavirus. Thank you very much. Well, coming up on the show, new data on how yesterday's rally broke the Wall Street mold. But first, take a look at this morning's biggest Dow winners in the pre-market. You can see there, we're talking ExxonMobil up 1.5%, American Express, payments processor and bank up 1.5%, and Caterpillar up 1.5% as well. And a reminder, you can always watch or listen to us live on the go with the CNBC app. Stay tuned. Worldwide Exchange is back in just a moment.
Worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
We are the dreamers.
We changed the world.
Because we don't give up.
IU can help you live your dream.
IU is an online college, so your campus is wherever you want it to be.
Take classes when you want to take classes.
You receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
Call IU, then tell them your dream.
1-800-967-1179. 1-800-967-1179.
Next on Squawk Box, coronavirus fears, market volatility, dilemmas for investors. Should you buy, sell, or sit tight? Some strategies to get you through the turmoil. Squawk Box today, 6 a.m. Eastern. Watch or listen live on the CNBC app.
Read. Read yourself past the gossip mags, past the agendas, the bias, the partisan pandering. Read yourself better.
What's interesting about this episode is
The Profit, an inside look.
All right, let's watch.
All new tonight, 10 Eastern.
Welcome back to Worldwide Exchange. Time for the executive recap, the headlines you need in 60 seconds. SoftBank CEO Masayoshi Son met with U.S. investors yesterday in what some are calling a charm offensive. He is coming under fire from hedge fund Elliott Management, which is calling for SoftBank to make changes, including buying back $20 billion worth of stock and improving transparency. Masa Son reportedly told investors he'll be more careful with his behavior. Elon Musk says he supports Jack Dorsey remaining as CEO of Twitter. Elliott Management has reportedly been pushing for Dorsey to be removed from that CEO job at the social media company, so we'll watch that. And Robinhood experienced a system-wide outage yesterday, resulting in its clients missing out on the biggest Dow one-day point gain ever. The free trading platform is popular among younger traders, so Robinhood traders feeling a little bit of the sting. Now back to the markets. The Dow, the S&P, and NASDAQ coming off their biggest one-day point gains in history. But as the folks at Bespoke point out, yesterday was not a normal bounce-back day. Why? Well, historically, stocks that got hit the hardest during the sell-off come back the most. But that did not happen yesterday. If you look at the Russell 1000, the stocks that fell the most during the sell-off actually bounced the least in yesterday's trading. Carrie Firestone is still with me this morning and has been for the last hour. Carrie, does it worry you that some of the hardest hit are not bouncing back as strongly as the others are?
It doesn't worry me. What you need to see is that the leaders going into the downturn recover. And those leaders are a lot of the digital platform companies. So if you look at what was going on with Amazon, Facebook, as we talked, Microsoft, Apple, those stocks had very strong days. And I think that is the most important thing, to feel comfortable that a rally can continue. If you look at the worst performing names, whether it's energy, big underperformer in the first part of the year, during the rally that we saw, it's starting to come back. You're going to see today more improvement in travel and energy-related stocks. So it's not who's first, but it's whether they all get there. And the S&P, if it broadens, it will be a good sign today.
What's interesting, we just told that story about how Robinhood, the free trading app, had an outage because so many people were trying to get it that the system crashed.
Right.
Other broker-dealers, to be fair, have had similar problems over the past couple of weeks here with the volatility. How much of that volatility that we've seen in markets is because people are actually out there trading more?
Yeah, well, it's a very good question, and we will find that out, for example, when Schwab reports. But free trading, meaning no commissions, is new, and it could have incited people to both buy more on the upside. We saw that buying frenzy in the month of February, and it could also have caused people to sell dramatically because it's free, and they could be buying again today. So the speed of trading free, no commissions, could have an effect on this market, which we're going to find out if individual investors have made a big difference here.
So maybe a byproduct of free commission-free trading is more volatility because people can just get in and out without feeling a financial pinch on the commission side.
Yeah.
Now, we'd be remiss, Carrie, if we didn't let you leave here without talking a little bit about Super Tuesday. Your take on a possible Sanders nomination and what it means for the sentiment in markets now that moderates, a lot of them have all but dropped out. Biden is still in there. Bloomberg is still in there right now. But how do you think the election cycle plays into the market psychology right now?
Well, one could have made the case, and I've heard it many times, that the decline last week was in part because of a Sanders front-runner status and the strength that he was picking up with his previous wins. So then we had the Biden victory, big victory, and we have two other candidates, Buttigieg and now Klobuchar, backing Biden. I think that the market would be more comfortable with that, as with Bloomberg as a candidate. And so it perhaps is a positive in terms of fueling a little bit of the buying momentum.
All right. Now, we have an op-ed at CNBC.com right now that you penned, bubble. You say this is not the bubble like you've seen it before. What exactly do you mean in just about 10 seconds here?
Because 2000 and 2008 were bubbles, excessive overvaluation, really overbought territory of all stocks. And that is not what was driving this market down last week.
All right. Carrie Firestone, Aureus Asset Management. Thank you so much for joining me this entire hour. Appreciate it.
Thank you very much, Don.
All right. Squawk Box picks up coverage right now.
Good morning, Wall Street. Coming off its best day in more than a decade, we'll show you the biggest winners and losers in that rally.
A meeting on coordinating virus response among G7 countries is likely to set the tone for today's session. That conference call is expected 1 hour from now.
And President Trump making his preference known, renewing his call overnight for Fed easing and rate cuts. It's Tuesday, March 3rd, 2020, and Squawk Box begins right now. Good morning, everyone. Welcome to Squawk Box here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Mike Santoli. Andrew is out today. Let's take a look at the U.S. equity futures at this hour. Right now, the Dow futures indicated up by about 66 points, but this comes after a huge day for the markets yesterday, a gain of almost 1,200 points, which is the biggest one-day gain we've ever seen in terms of points for this.
It was pretty stunning. It kind of just gained pace throughout the last hour. Kind of an equal and opposite reaction just in terms of the, I guess, extremes that the market went to on the downside last week.
Almost 1,300 points. Yeah, 1293.
Almost 1,300 points. 5% on the Dow, 4.6% on the S&P 500. And then remarkably, both those indexes remained below Wednesday's close. So you kind of made up almost 2 days worth of losses. But since intraday, or
up
Friday
8%
morning,
from the lows on
that's
Friday.
pretty. So essentially, that's half of the total losses intraday high to intraday low was regained in, a day and a half.
Watch some of the coverage, not on our network, but on others. They always, the most simplistic explanation is what mainstream usually comes up with, general news, and it was on hopes for a rate cut. And it's like,
or maybe we went a little too far.
Well, on Friday, we weren't in a. We talked for a lot with Jim too on Friday about just whether, and I actually made a joke about it. I said the market seems to have terminal pricing already for some of the worst case scenarios for the virus, and I mean it did sell off quite a bit in the quickest sell off ever, 1,000-point increments, and. I don't know, then you combine that, maybe there was the one individual for the Diamond Princess that said, I've got it, and I felt sicker a couple of years ago when I had bronchitis. Normally I'd go to work if I felt this way. And a lot of people were covering China. It seemed to be diminishing the new cases to some extent. And I just think there was we went from once again looking into the absolute abyss and an apocalypse and a pandemic and Bill Gates and all these things, and it just seemed to subside a little bit. It could get worse again.
That's the thing. Human behavior is weird.
It is, but on a Friday, for it to rally on a Friday, going into a 2-day, they're all 2-day weekends, aren't they? Except the good ones are 3 and 4 day. But to go into that where you could have gotten 1,000 new cases or whatever could have happened, and to have it go up 600 then in the last half hour, and then up another 1,300 showed a bit of a change. And just at
least in the short term.
In the end of day segment. Or the end
I love
of
this graphic to show you the swings that we've been seeing. I mean, anybody who got used to complacency.
Well, Friday doesn't really, that doesn't really sum it up because we were down 1,000 at 3:30, basically. And then it came back in the last 25 minutes. That might have been short covering position square.
Well, look, it was the end of a month. I definitely think that some of the extra pressure last week was this kind of month-end, very systematic, mechanical type trading. Not that it's false or wrong or not real prices, but that was an accelerant on the activity.
How much of it?
And then there's an upside air pocket.
Right, yesterday. But how much of the move yesterday was hopes for
I think it was in the background. Look, I think that the Fed statement on Friday sent the message, we're here, we probably don't have a very high threshold for easing. It's probably going to happen in March. Now, emergency rate cut over the weekend wasn't needed.
No.
Something yesterday, not needed. Right. By the way, same as December of 2018. It was words that did the job for months until they actually got a rate cut. So I do think the message was sent. The bond market, by the way, very interesting, was really pulled up in yield by the stock rally at the end of the day.
Right. Take a look instead of the bond market
there's a sort of push pull that goes on, but yes.
Take a look at treasuries and kind of see where they were. The 10-year yield hit an all-time low yield in yesterday's session of 1.03%. Check it out now, 1.158%. So a huge bounce in the yields there. The 2-year 0.0881%.
Yeah. We had already decided that they can't save us, central bankers, and that we're already negative in much of Europe, and that doesn't work. So we got very little left in the tank, and it's not going to, and it may help sentiment a little bit. It can't cure the malaise of a pandemic. We had already decided all that. So then how does it cause a 1,300 point?
It doesn't cause it, but it's part of the mosaic of what's sitting there.
I know, but you know what I'm saying. When they got on a general news, they're covering all these other things, so they need a one-sentence explanation of what happened in the stock market. Went up on hopes for the Fed cutting interest.
Well, look, the bond market is still decisively pricing in a pretty significant easing move.
30 years like 20 basis points higher than its low yesterday. The 30 years like 20 basis points higher.
But again, if you look at the 2-year at 88 basis points and the Fed funds rate is over 1.5%, it's suggesting that we're definitely
they still think it's going.
Yeah, on the other side of that, it never ceases to amaze me how much stock traders just will buy based on what the Fed does and lower interest rates.
Look, there's a lot going on yesterday. It wasn't just that.
But they do, and I'm saying that shouldn't do it, but some of them still do, based on, oh my God, the Fed's easing.
Don't fight the Fed is muscle memory.
And Tina,
for sure.
Everything else.
Yeah. Meanwhile, global finance ministers and central bankers from G7 countries will hold a conference call at 7 a.m. today to coordinate the financial and economic response to the coronavirus. CNBC has learned the call will be led by Treasury Secretary Steven Mnuchin and Fed Chairman Jay Powell. And a statement is expected after the call. Reuters reporting that a draft statement includes direct calls for new...
excludes,
excuse me. Calls for direct government spending or coordinated rate cuts. So far, U.S. equity futures turned negative when that news broke just before midnight, and we're kind of flattish. Actually, a little up now on the Dow.
I mean, you think those calls would have been in there if the market had gone a different way yesterday?
It's unclear.
It suddenly seems a little
did
less.
seem by the end of the day that perhaps we were back from the brink and it bought central bankers some time, perhaps.
For now, right?
Yeah.
For now, until